Good evening, everyone.
Good evening, sir.
Good evening.
Good evening, sir.
Good evening. Others, क्या हो गया?
Good
हाँ?
evening, sir.
Good evening, everyone. Yes. Yeah, you're giving a professional exam. ऐसे नहीं कि चुपचाप बैठ जाए अपन. You should not be silent. Any doubts? Ask me. See now, what will be the agenda? As mentioned, we will start with the standard. We'll do the topics, and I'll be mentioning from the standard what are the 10 MCQs that are mostly tested in your exam. If time, as we have, if this topic is tricky, okay, I'll take a question regarding that also. And before that, before starting, as we have still 3 minutes, before that I want to give a brief idea. As I have divided the syllabus in 5 parts, my regular batch students know this key. I have divided the syllabus in 5 parts. The part 1 is regarding your non-current asset part. Then your part 2 is regarding your big standards, 5 big standards. The part 2 is regarding your 5 big standards, that is revenue, leases, financial instrument, taxation, and EPS. Then part 3, small standards. Then part 4, consolidation. Part 5, interpretation, regulatory framework, and IAS. 7, cash flow. Sir, what is important for section B? Section B important is part 2. Section B important part is what? Part 2. Out of these 5 standards, 2 standards will be tested. We have seen. And in one more question can be from your part 1. No, no, no issues, no issues. You attend SBR, it's enough. Chalo then, everyone. So, as mentioned, so today's agenda will be what? We cover the part 1, and in part 3, we cover IAS 2 and IAS 41. So, part 1, we will cover the entire. Part 3, IAS 2 and IAS 41. Tomorrow, we'll cover part 5, big standards. Then, we will cover part 4 and some small standards. And the last day, interpretation, conceptual, and regulatory framework we will be discussing. Okay. Okay, chalo then let me use my class notes only so that it will be good. So now, starting with the first standard, IAS 16. In IAS 16, there are 10 types of MCQ that usually comes. The first is regarding your cost. The second one is regarding depreciation, then revaluation, change estimate, theory questions, a lot of other things. As we do, we will see this. So part 1, IAS 16, starting with IAS 16 PP. So whenever we start any standard, we'll cover the definition, recognition, measurement, presentation, disclosure, derecognition. So IAS 16 talks about PP. It's an important standard. If you have understood this, your IAS 40, IAS 38, IAS 36, IFRS 5 will be easy. So this I'll spend good amount of time here. IAS 40, IAS 38, we will do it fast. So IAS 16, we know, sir, non-current asset, current asset. Non-current asset means what? Less than 12 months. Current asset means less or equal to 12 months. Under non-current asset, there are two categories: tangible, intangible. Tangible means which we can touch. Intangible means we can't touch. We follow IAS 38. So intangible, IAS 16, IAS 40. Yes. So what are the points? These are the 6 points which we will cover when starting any standard. So IAS 16, let us start with the first topic, that is what, the meaning. What is PP? PP is what? An tangible item which we can touch, which is expected to be used for more than one period, that is 12 months. And it is used for what? It is used for production process for our business purpose, or it is given on rent to some other party, and it should not include building and land and building, or for administrative purpose. Any one criteria should be met, we will say it is what? PPE. Sir, if land and building, when we will say land and building will be IAS 16. If it is used in the business purpose, if it is used for business purpose or for administrative purpose, head office, etc. IAS 40, if I have a land and building and this is given for rent purpose or capital appreciation, we say it comes under IAS 40. So the main logic, what you have to remember, if it is for business, if it is for business, IAS 16. If it is not for business, IAS 40. Simple. In the class, we have taken a lot of examples. Now, chalo, some few examples where an MCQ question can come if you're lucky. Land and building held for use, IAS 16. Land and building held for sale in ordinary course of business, IAS 2 inventory. Land and building held for sale, IFRS 5. If it is for business purpose, IAS 16. If it is not for business purpose, IAS 40. Any asset other than land and building which is given on rent, we follow IAS 16 only. Then office building, factory building, company quarter, building which is given for staff accommodation. Here also we follow IAS 16 only. Yes, sir. The definition part is then recognition. When will you recognize a PP? A PP will be recognized when cost can be measured reliably, probable future economic benefit. The future economic benefit should be there from that. Yes, sir. If the recognition criteria is not being satisfied, directly we record into P&L as an expense in operating category. Yes, operating category. Now see, initially we record the asset at what, sir? Initially we record the asset at cost. Now what all will cost include? The cost will include what? Purchase price, non-refundable, any import duties, non-refundable cost, finance cost if IS 23 criteria are being met, legal cost, delivery cost, installation cost, site preparation, professional fees, employment cost, direct material labor overhead if we are constructing any PP. Then present value of the dismantling. In future, after 10 years, I have to dismantle this PP, I will incur some cost. So that cost, how will I add it? I will consider the present value, we will discount it. I discount it, I record debit asset, credit provision. Provision as a liability, and for that provision, we have an unwinding cost, which we take to P&L. Then trade discount. What is the important thing? So trade discount, we will reduce it. Do we consider settlement discount? Settlement discount is ignored. These are the costs which we consider. Costs which are excluded, like staff training cost, general administrative overhead, advertisement cost, day-to-day repair cost. All these are taken to P&L under operating category. So this where will you make mistake? Initial operating loss will not be considered as part of the cost. Abnormal loss will not be considered as part of the cost of the asset. So this is the first type of MCQ that can come in your exam. A very easy and a simple thing. What are the elements which belongs to the cost? For this, I'll not take a question. It's an easy thing. Now see everyone. Cost of dismantling removal or decommissioning cost. How we will treat this? How we will treat decommissioning cost? Sir, it's an obligation as per IS 37. We know that. So it is a provision. We should recognize a provision. So we calculate the present value. What do we record? Debit, asset, credit, provision for dismantling cost. So then unwinding of this provision should be done, and finance cost should be taken to what? So finance cost should be taken to P&L. Under which category? Financing category. Which category? Financing category. So what is the journal entry? So debit PP, credit bank, credit provision. For unwinding, debit finance cost, credit provision. Then this finance cost we will take to P&L. Yes, sir. What is the entry for depreciation? The entry for depreciation is debit depreciation, credit accumulated depreciation. This is the normal journal entry which you have learned, debit, debit, credit, PP. But instead of directly reducing the value of the PP, we create a accumulated depreciation account. This depreciation we transfer to P&L. This is the amortization table which we have to know. This amortization table we will use in lease accounting, IFRS 9 financial instruments also. So opening balance, your provision, the interest which will apply, actual payment. Are we doing the payment today? No, after 10 years we are doing the payment. So closing balance. So what is the formula? Discount factor 1 divided by 1 plus r to the power of n. This is the one which you have to consider. Now see everyone, a question regarding cost. What are the costs you will include? Now everyone, see, cost of the land, yes sir, we will include. Trade discount, we will include, we will reduce it. Non-refundable tax, we will consider. Construction of material, we will include. Abnormal loss, we will ignore. Staff training will be included. Labor charge included. Architect fee, survey fees. Specific overheads are included. General overheads are not included. So this is ignored. Testing, fire alarm is that is also included. Annual business taxes. Will you include this, everyone? Business tax, will you include? Business
No,
tax
sir.
for the first year we will not include.
No.
Settlement discount also we will not include. So this is a first type of question that can come in your exam. Very easy, but it's very difficult that you will have this easy question in your exam. So the
सर
first
आप स्टाफ ट्रेनिंग कॉस्ट इंक्लूड नहीं करते?
staff, which one?
स्टाफ ट्रेनिंग आपने बोला है कि इंक्लूड करते हैं।
सॉरी सॉरी सॉरी, मेरे को स्टाफ कॉस्ट लगे, इट्स नॉट इंक्लूडेड, सॉरी माय बैड. Staff training cost, if the cost is regarding construction part, we include it. Staff training cost will be ignored, sir. Then for dismantling, I hope everyone knows. See here, A Limited purchase a oil rig for 5 million. Installation cost is 2 million. Decommissioning cost is 2 million after 6 years. So this 2 million we will discount or not? So this 2 million we will discount. So when I discount, I get 0.76. So I get this 0.76 and I multiply with this, I get 1.492. The discount factor is this, I get this value. Sir, what is the entry we pass? Credit provision. Sir, asset, what all will include in asset? So purchase price of 5 million. Then we include installation cost, then present value of this. Yes, sir. So we include this. Cash is going out. Yes. Then the next year, what is the next year? In the next year, after that, we charge interest expense and we record depreciation. So read the question carefully. If the question is saying total expense, in that case, we have to include interest as well as the depreciation relating to provision. Do not do this silly mistake in your exam. So with this part is done. Then coming to some important points which you have to keep in mind. Do we consider the sale proceed received from testing? Today I test a machine. If I test a machine, a cost is involved. So that is capitalized. But if I get a sale proceed out of that, will I consider it? No, Baba. Cash settlement discount, it is ignored. Any income or expense which I get during the construction process, I am constructing my factory and that factory space is empty, I'm giving this on rent parking, I'm getting some income from that, that will not be taken to cost of the asset, it will be ignored. So subsequent expenditure, what should we do for subsequent expenditure? Subsequent expenditure we have to capitalize. When we will capitalize? If it provides economic benefit, if it provides more economic benefits in future. So in exam, what are the keywords you have to keep in mind? If it extend the asset useful life, it increases the productivity of the asset, decrease the operating cost. If the operating cost is decreasing, it is also a subsequent expenditure. If that subsequent expenditure enhances the economic benefit, it is a capital expenditure, we capitalize it. If it is a revenue expenditure directly to P&L, operating category, simple.
सर
Yes.
ये रीजंस की वजह से आप करते हो ना?
Yes, yes. Then, chalo everyone. The next topic which we'll be doing is regarding depreciation. Now, depreciation. Depreciation is what, sir? Depreciation is reduction in the value of the asset. Depreciation is reduction in the value of the asset. Depreciation is a systematic allocation of depreciable amount of an asset over its useful life. What is the maximum depreciation we can charge? The maximum depreciation that we can charge is what? Cost minus residual value. Cost minus residual value. Simple. Do we consider useful life or economic life? We consider useful life. If the MCQ is saying useful life, economic life, select what? Useful life. Depreciation will start when? Depreciation will start from the date the asset is ready for use, available for use. Then depreciation will stop when? Depreciation will stop when the asset is classified as held for sale or it has been disposed of. We have sold it. Depreciation, where will you record? Depreciation will be recorded into P&L under operating category as an expense. Simple. So these are the key points which you have to remember for your exam. So see everyone, under depreciation, what are the three methods we have? The three methods which are there is what? First one is SLM basis. The next one is what? SLM, cost minus residual value divided by useful life. WDV, in WDV what do we consider? So the opening balance into the percentage. The opening carrying amount into the depreciation rate. In unit methods or unit of production method, in that case we consider the number of units produced in that particular year based on the total number of units that the machine can produce. These are the three methods which you have to keep in mind. So cost minus residual value divided by useful life, you get the value. And WDV and unit of Production method is easy. Okay, this we have done. So see here now. A lorry bought for N limited cost 17,000. It is expected to last for 3 years. The residual value can be sold for 2,000. Residual value is 2,000. So maximum depreciation is what, everyone? So 15,000 is the maximum depreciation. So that 15,000 I will divide by 3. It will be what? 5,000 per year. Simple. So in P&L, I will take this depreciation. In balance sheet. What will I record? Non-current asset. Will you recognize 15,000 minus 5,000? No. 17,000 minus 5,000 will be my carrying amount. Then for second year, third year will continue. WDV method. So 17,000 is the value into 50%. 8,500 is the balance in the balance sheet for year 1. Year 2, sir. Year 2 we consider 8,500 into 50%, 4,250. So what will be the value again? 4,250 in the books. Third year, what will do, sir? 4,250 into 50%. So what is the depreciation coming? 2,125. But the useful life of the asset is 3 years only. So what will I do? Sir, the depreciation which we have to charge is what? The value should be equal to 2,000. But it is 2,125. So that excess, the remaining 125, I will record into P&L as an expense today only. Simple. Then production method will consider the units produced. I will apply 15,000 into 150 divided by 300. We will consider all this point and we will record it. Simple. So with this, your depreciation methods are also completed. Now the next important point that comes in your MCQ, very important. Whenever there is a change in useful life, etc., XYZ, what should we do, sir? See, 10,000 is the value, residual value is 2,000, 10 years is the this one. So here whenever these both are what? It is an estimate. So whenever your estimate will change, what will happen? Prospective treatment, not retrospective treatment. So I say, what is your year 1? So carrying amount was 10,000 minus 800 depreciation, 9,200 we got. Now in year 2, the estimate has changed. If the estimate has changed, what will happen? See. Sir, cost, what is the formula? Carrying amount. We will take the cost as what? Carrying amount now. So 9,200 minus new residual value, that is 1,600, divided by new useful life. New useful life, that is 4. So this is the depreciation which we get what? For the future years. So if there is a change in useful life and residual value for depreciation method, prospective treatment effect will be given in the remaining future periods. Revised depreciation, carrying amount minus revised residual value divided by revised useful life. So read the question carefully. If the question is saying that the revised total useful life is what? 8 years. So then for how many years we will charge depreciation? For 7 years. Read then. The remaining useful life is 8 years, sir. Then the depreciation will charge for how many years? The depreciation will charge for 8 years. So read the question carefully, the MCQ. Avoid mistake in this area. So with this, your prospective treatment part is also completed. Yes, sir. Then coming to component accounting. What does component accounting says? Component accounting says that we have to record the depreciation separately for each part of the asset, which are significant. Which are significant. So what did I mention? I purchased an asset of $10,000. 2,000 is value of the motor year. So this 8,000 I will depreciate for 10 years. 2,000 I will depreciate for 5 years separately. So my ultimate depreciation will be what? 1,200 only in P&L operating category. So what will be my value of the non-current asset? 10,000 minus 1,200. We will get what? 8,800. Why are we depreciating separately? Because the useful life is different. So see everyone. Subsequent cost, repair and maintenance will normally go to P&L operating category. Then replacement part, whenever we replace any part of the asset, what will be the carrying amount of the asset? New carrying amount, we have to discuss that. Major inspection and overhaul accounting is same as your component accounting. So what does component accounting says? Component accounting says that significant part of the PP should be depreciated separately. Should be depreciated separately. So how do we do this? So carrying amount of the new PP will be what? Carrying amount of the PP on the date of replacement minus the old part, the part which we have removed, plus the cost of new part, plus the cost of new part. So what is the journal entry? So credit, the asset is going out. Debit, accumulated depreciation regarding that. The difference will be what? The difference will be gain or loss on the disposal. This journal entry is regarding the old asset. What is the new asset? Debit asset, credit cash. So this gain or loss, where will you recognize? In operating category, P&L. So this was the accounting regarding component accounting which we have covered. Then sir, major inspection. Major inspection means what? At every 5 years, 6 years, inspection should be done so that the asset is safe and it does not cause any damage to the public, etc. Government will bring in rule. So it's in aircraft, ship business, or the machines which have a useful life of 40 years, 50 years. In that case, we do this. So the inspection cost initially is already included in the cost of the asset. So what do we do initially? So we separate that inspection cost, we depreciate it. Inspection cost we depreciate it separately, and the value of the asset we depreciate it separately, like component accounting. Major overall cost, same like your component accounting. When significant repair is required, a part of the asset is repaired, so we remove it, we bring in a new asset. You have to see this part. Now coming to subsequent measurement. In subsequent measurement, what do we have? So what are the two methods? Cost model, revaluation. So cost model, how we will calculate the carrying amount? Accumulated cost minus accumulated depreciation minus accumulated impairment, we get the carrying amount. Revaluation model, fair value less subsequent accumulated depreciation less accumulated carrying, accumulated impairment. Now here, what is the difference? You have to take the subsequent accumulated depreciation and subsequent accumulated impairment. Once we revalue the asset, prospective treatment is done. We will not come back and do any adjustment. Simple. So see here, everyone, understand the cost model revaluation. 10,000, 9,000, 8,000, 7,000, 6,000, every year 1,000 is the depreciation. If today I say I have an asset of 10,000. Useful life is 5 years. 2,000 is the depreciation. So what is the carrying amount? The carrying amount is 8,000. The carrying amount is 8,000. But now I say the company is following fair value, and the fair value revaluation model, the fair value is 12,000. If the revaluation model they are following and the fair value is 12,000, the gain is of how much? The gain is of 2,000. Where we will recognize this gain? So this gain is recognized in OCI. The gain is recognized in OCI. Then for the next year, depreciation will be based on what? So depreciation will be based on 12,000 divided by 4. Subsequent depreciation. So read the question carefully and answer it properly in the MCQ. If revaluation model is there, we revalue, then impairment is there on that. So now let us revise the rule for revaluation gain or loss. Where will we take the revaluation gain or loss? So revaluation gain. I say revaluation. First time revaluation. You are revaluing the asset for the first time. If you are revaluing the asset for the first time, where will you take the gain? Sir, OCI, sir. Simple. Sir, if it is a loss for the first time, if it is a loss, P&L operating category. So for the first time, it's easy. It's not difficult. So subsequent, when subsequent revaluation is there. Sir, in subsequent, we have a revaluation gain and we have a revaluation loss. Sir, today we have a gain. Previously also we had a gain. So OCI. Previously gain, today also gain, both in OCI, no problem. Sir, today we have a gain, but previous we had recorded a loss. In the previous year, we recorded a loss in P&L, but today I have a gain. What will I do? First, I will take this gain to the P&L. Recognize gain in the P&L to the extent loss recognized in P&L. Any excess gain will be transferred to OCI. The next part, revaluation loss. In revaluation loss, what will happen? Sir, if the revaluation loss is there, normally we record in P&L, but we have to see previous year. Previous year also in P&L. This year also loss, P&L, no issues. So previous year we had gain. Previous gain was there, but this time loss is there. So what we will do? This loss we will adjust to OCI first. We will adjust to OCI and then remaining loss we will take to P&L. Adjust revaluation loss to OCI to the extent reversal that can be done, and any excess loss we will take to P&L. We will take it to P&L. So very important thing. Yes, sir. Now coming some important notes which you have to understand. Frequency of revaluation. Now, when will you revalue the asset? This came in your pre-mock. This was in your pre-mock. Frequency of revaluation. When will you revalue the asset? So we will revalue the asset when annually if the value is significantly changing. So if the value is not significantly changing, 3 to 5 years we revalue. So revaluation will apply to entire class of asset. Your revaluation and cost model revaluation model is accounting policy, not accounting estimate. Do not do this mistake. It was tested in your pre-mock again, this one. So class of asset means what, sir? Class of asset means asset of similar nature and use. The assets are of similar nature and use. If I have 10 factory buildings, for all 10 factory buildings I have to apply revaluation model only. We can't do cherry picking here. Cherry picking is not allowed. So office building and factory building are different class of asset because the nature is totally different. Office building, factory building, the nature is totally different. So here the concept of revaluation applies on class of asset basis. MCQ question. Yes, sir. See now everyone, an important point where you will make mistake in your MCQ. Each building revaluation gain or now important point, what is the important point? Can we use the revaluation gain of one entity to offset the revaluation loss of another entity? Can I use the revaluation gain of one entity to offset the revaluation gain of another asset? It's not possible. Cannot use the gain from one building to cover the loss of another building. You can't do this. You can't do this. If A company has a OCI balance of 20,000, the fair value of the machine B is decreasing, there is a loss of 10,000. Can I offset this revaluation loss to 20,000? It's not possible. So the OCI balance of that machine should be used to offset the loss particularly to that machine only. Understand that. So with this part is done. Then coming to the next part, transfer of revaluation reserve to retained earnings. Transfer of revaluation reserve to retained earnings. Sir, when can we transfer the OCI balance to retained earnings? When can we transfer it? A simple thing. What is the default? When we dispose of the asset. When we dispose of the asset, what can we do? When we dispose of the asset, we can take that revaluation surplus to retain earnings when we dispose of the asset. So what is the option 2? Option 2 says what? During the life of the asset, during the usage of the asset, you can transfer revaluation surplus to retain earnings. So see here now, revaluation surplus may also be transferred to retain earnings during the asset is used by the entity. That is, excess depreciation is transferred to retain earnings. How, sir? Whatever is the excess depreciation before revaluation, what is the depreciation? After revaluation, what is the depreciation? That difference we can take it from revaluation surplus to retained earnings, not to P&L, not to P&L. So when should we follow this option 2? If it is mentioned in the question. If it is mentioned in the question, then only we will follow. If not, we will not follow this. So with this part is also done. Now coming to derecognition. When will you derecognize the asset? When we will derecognize the PP? We will derecognize the PP when we sell or dispose it, or when no future economic benefits are there. Economic benefit is not there when we dispose of, control is lost. So gain or loss on derecognition, how do we calculate? Net proceeds minus the carrying amount, minus the carrying amount. So this gain or loss should be recognized in P&L. Which category? Operating category. And once we dispose of the asset, any balance which is there in if it is a revalued asset, any balance in OCI will be transferred to retained earnings, will be transferred to retained earnings. What are the disclosure that we should give? Like measurement basis, whether cost or revaluation model, useful life and depreciation rate, methods of depreciation, reconciliation of carrying amount at the beginning and at the end, like a passbook. What was the addition during the year? Which is the PP we have disposed of? What is the depreciation during the year? If any asset has been classified as held for sale, what is the total revaluation gain during the year? These are the figures which we have to disclose and the calculation of this one. So with this, your IAS 16 part is done. Any doubts to anyone in IAS 16? Yes or no, Semi? So see, this is the question. As I mentioned, 28th. Alpha owns two machines. We had done this question class. Machine A carrying amount before revaluation was 100,000. Revalued amount was 130. So revaluation revaluation gain is what? 30,000. But previously revaluation loss recognized in P&L was how much? 20,000. 20,000. So what we will do? So 20,000 was the loss. Now we will reverse it. We will record in P&L as a 20,000 gain. 20,000 gain in P&L. So the remaining 10,000 will go to OCA. Yes, sir. This is for machine A. Machine B. Carrying amount before revaluation was 2 lakhs. The revalued amount is 170. So your revaluation loss is what? 30,000. 30,000. So revaluation surplus was how belonging to this asset was 25,000. So what will I say now? Out of this 30,000 loss, I will utilize the 25,000. The remaining is how much? The remaining loss is what? Remaining loss is 25,000. Can I offset this 5,000 with this 10,000? Can we do it? We can't do it. So what is the amount we will take to P&L every 1 year? What is the amount? What is the net effect? So 20,000 as a gain in P&L and 5,000 what? As a loss in P&L. So 15,000 net we will take. Answer in OCI. What is the amount we will take? What is the OCI amount? So that was 20,000. We have utilized it. 10,000 was in 2,000 and 10,000 in OCA. Then this 30,000 was that. This 30,000 was lost. We have utilized this 25,000. We have taken this to OCA. And that 5,000 we have recorded in P&L. So what is the net impact in OCA? See, this and this value. 25,000 loss and 10,000 gain. So in total, there is a loss of 15,000. So be aware regarding this point. We have done one MCQ also regarding this. So with this, your IAS 16 is done. Any doubts to anyone in IAS 16? No doubts? If no doubts, then let us start with IAS 40, investment property. Now, what does investment property means? Investment property means I have purchased a land and building not for my business. Not for business. Property includes land and building. So investment property is a property, land and building, or both held by owner or by the lessee as a right of use asset for rental purpose, and it should not be my business, or capital appreciation, or if the use is not determined, rather than for use in the business or sale in ordinary course of business. If we are selling this, it will become what, sir? It will become our inventory. So what are the points? Property that is rented out to employees, it will be IAS 16. Property being constructed or developed on behalf of third party, it is not your building, you will recognize revenue on this. If property is given on a finance lease, will you classify anything? No need to classify, because in finance lease we de-recognize. In the class we have discussed this in detail. Excuse me. Land bought but use is not determined. We purchase a land but we have not determined the use. So IS 40. Property which is constructed for use, for future use as investment property, then IS 40 we will apply. A simple thing, the definition. Then dual use of a property. If there is a dual use of a property, if a property is that property I'm using as IAS 16 also, IAS 40 also, how should we classify this? In that case, if land and building is used for dual purpose, that means for business as well as for renting purpose, then if I say if it is separable, if the flows are separable, then we treat it separately, IAS 16 and IAS 40. Not separable, it is difficult to separate it. It is difficult to separate it. In that case, what we say, if the building is significantly used for business, IAS 16. If the building is insignificantly used, if the building is not used for the business purpose, IAS 40 then. IAS 40 for MCQ, it's important. Then, sir, ancillary services. Ancillary services means what? These services which are provided, like security services, cleaning, etc. All of this. If ancillary services which are provided is insignificant, it will be investment property. If ancillary services provided are significant, it will be IAS 16 PP. Then, in the consolidated books, if parent company is giving a property to rent for a subsidiary company in separate books, it is IAS 40. But when we do consolidation, it will become IAS 16 because your consolidation is based on what? One single economic entity. It's one single economic entity. So it will become IAS 16 here. So with this part is done. The definition part is done here. Then coming to the recognition principle. When will you recognize an investment property? Recognition: investment property shall be recognized as an asset if future economic benefits are there, cost can be measured reliably at that time. Measurement principles. Initially, same as IAS 16 which we have covered. Sir, initially we recognize at what, sir? Initially we recognize at cost, capital expenditure. We capitalize, revenue expenditure will go to P&L. Subsequent, we have two methods: cost model, revaluation model. So cost model is also same as your IAS 16. There is no such different. Cost less accumulated depreciation, less accumulated impairment loss. In revaluation model, what is the difference, sir? The asset is revalued. Instead of taking this to OCI, we take to P&L. Instead of taking this to OCI, we take it to P&L. And once the asset is under revaluation model in IAS 40, no depreciation will be charged. Depreciation will not be charged. That is the difference. Two difference. Gain will go to P&L, no depreciation charge under revaluation model. Under cost model, we charge it. So depreciation is recorded under investing category. Depreciation is recorded under investing category. See then, important point for MCQ. If company chooses the fair value model at the end of the first year, today it is 1st January, at the end they are following what? Fair value. If they are following fair value, will the company charge depreciation for that year? For the first year also, no depreciation. For the first year also, no depreciation. Yes, sir. So with this, the initial and subsequent part is done. Read the question carefully in the exam. Whether they are saying it is head office, investment property, read it properly. Then some important points here. Here, when coming to the class of asset, will the class of asset concept apply here? No. All investment property, either it should be recorded at cost model or at revaluation model. All, each and every investment property, either at cost model or revaluation model. Sir, can we change the model? Can we shift from cost to revaluation? Yes, because it provides a fair presentation, appropriate presentation, better presentation is provided. Sir, can we shift from revaluation model to cost model? You can do it, but the standard is saying what? That from revaluation to cost model, it is difficult that it will provide better presentation. It's not that easy, or it's not okay to present from revaluation to cost, because the chances are very less that it will provide a better presentation. Yes. So, sir, as per IAS 40, where do we record the rental income, sir, from investment property in investing category? Sir, where do we record the gain or loss, the depreciation, subsequent expenditure, initial expenses? Everything will go to P&L, investing category. Each and everything will be recorded in investing category. What is the exam advice? The exam advice is what? That in the question, if it is mentioned investment property, you have to follow IAS 40. So the examiner has mentioned that in your exam, it will be clearly mentioned it is investment property. If they have just mentioned property, IAS 16. Investment property, IAS 40 you have to. So till here, definition is done, recognition is done, measurement is done. The next part which we have to learn is the transfer case. And each attempt we have seen a question is there from this. In your pre-mock also a question is there. Last attempt also a question was there. September pre-mock also a question was there. So listen everyone. Excuse me. Transfer means what, sir? Today, office was there. Office premises. We have shifted to a new office. This office we have given on rent. So first it was IAS 16. Now we have transferred this to IAS 40. First it was IAS 16. We have transferred it to IAS 40. We have to consider the following things here. So see here now. Let us see the 8 cases which we have done in a regular class. The problem is not that in cost model or revaluation model. The problem is if one is following cost and one is following revaluation. I say IAS 16 is following cost model. IAS 40 cost model. Will there be any problem? No. The carrying amount is 9,000. This carrying amount will be shifted to investment property. Simple. Yes, sir. IAS 16 is at revaluation model. IAS 40 is at revaluation model. In that case, what will happen? So cost is that carrying amount we got 9,000. The fair value was 12,000. So what is the gain? The gain is 3,000. This gain we recognize in OCI as per old standard. So then this 12,000 will become what? Here the new value. And then will you charge depreciation once an asset is under revaluation model under IAS 40? No depreciation. Directly you will compare with the fair value. Any changes will be taken to investing category. Simple. Then sir, example. Next, IAS 16 is at revaluation model, IAS 40 cost model. Revaluation same 9,000, 12,000 is the fair value, 3,000 is recorded in OCI. This 12,000 will become what? The value for IAS 40. And this 12,000 we will compare with the fair value, and again the difference will recognize in P&L under operating. We will recognize not, no, it is under cost model, so depreciation we will apply here. We'll apply depreciation and do the normal accounting. The last case, which is an important where students will make mistake, see here. IAS 16 is at cost model, but IAS 40 is at revaluation model. So in that case, cost is 10,000, carrying amount 9,000, fair value is what's at 12,000. So this gain is of 3,000. Is IAS 16 following a revaluation model? IAS 16 is not following revaluation model, but still we have to revalue the asset because investment properties at revaluation model fair value. If you give this 9,000 to this IAS 40, will it take? It will not take. So we have to calculate the fair value. This gain you will treat as per old standard. The old standard is what? IAS 16. This 12,000 you transfer now. If you transfer, will there be any depreciation? No. Directly you compare the 12,000 with the fair value, and this 3,000 is the gain in P&L under investing category. Investing category. This is the important case which you have to concentrate. Then let us do for vice versa. For IAS 42, IAS 16. Sir, if IAS 40 is under cost model, IAS 16 is under cost model. Is there any problem? No. That 9,000 will become what? The carrying amount as per IAS 16. IAS 40 is at fair value and IAS 16 is also at revaluation model. In that case, what do? We calculate the fair value and then shift it. So when I calculate the fair value as per old standard, IAS 40 I will treat it P&L investing category. Then I will shift it to IAS 16. Then IAS 40. In IAS 40, IAS 40 revaluation, IAS 16 cost model. No issues. So first we will calculate the fair value and then shift it. Then we will shift it. So 10,000 divided by this. No. Useful life is what? 10. But do we depreciate? No, bete. Will not depreciate. The fair value is 10,000 or 12,000. So 2,000 in P&L as again investing category. Then we transfer this at 12,000 value. We transfer this at 12,000. So now for this depreciation will be charged. For this depreciation will be charged for the further years. Excuse me. Then IAS 40 and IAS 16. IAS 16 cost model, IAS 40 cost model, IAS 16 revaluation. Now the cost is how much? 10,000. So carrying amount 9,000. If I give this carrying amount to IAS 16, will IAS 16 take it? IAS 16 will not take it. In that case, what should we do? In that case, an important point is that first we have to calculate the fair value as per the old standard. So it is 12,000, 3,000 is the gain. This 3,000 gain we will recognize in P&L investing category, not in operating category. Understand that. So then, sir, here revaluation model, it is 12,000. Then we will depreciate here. In IAS 16, even though it is revaluation model, we depreciate it. We depreciate it. So with this part is done. And one important point, everyone, if your IAS 16 is under revaluation model and any OCI balance is there, and you have transferred this to IAS 40, will you transfer this OCI balance to revaluation to retain earnings? Will you transfer it to retain earnings? No, Baba. Once the asset has been disposed of. So when this IAS 40, the property which is that, once you dispose of it, at that time, this revaluation surplus will be transferred to retain earnings. Will be transferred to retain earnings. So see now, transfer to from investment property. What is the important point you have to remember? Treat it as per old standard first, transfer the asset. Treat as per new standard then. First, treat as per old standard, then transfer, then apply the new standard. Simple. Yes, sir. Then, what could be one more case? A case could be that inventory to investment property. Inventory to investment property. So, an inventory is that we are transferring that inventory to investment property. So, property is remeasured to fair value on the transfer date. I say, you recognize what? Sir, IS to inventory, cost or NRV, whichever is lower. I record it. We record it, sir. Now we record it at 100. But investment property is following fair value. So fair value means we have to calculate the fair value and then give the property to IS 40. So now the fair value in the market is 130. So the gain is what's at 30. Where will you take this gain? P&L. Which category? Operating category as per old standard. The old standard is IAS 2. Will take to operating category, not investing category. It's very important topic. This is tested in SBR also. In SBR pre-mock we have this for 4 marks. So it's important for FR also as well as for SBR both. So what are the disclosures we will give? Simple disclosure. Which model we are using, cost or revaluation model? What is the depreciation method? If cost model, what is the depreciation, SLM or WDV? Sir, if we are following the fair value, still we have to disclose the depreciation. We have to calculate the depreciation if cost model was followed. Then, sir, detail of income and expense for such investment property. Yes. Then we have there is a professional valuer who have calculated the fair value. That also we have to mention. So with this, your IAS 40 is also completed. Your IAS 40 is also completed. Any doubts to anyone in IAS 40? Any doubts? किसी को कुछ doubts है क्या? I hope there is no doubts. Chalo then, let us start with IAS 38, intangible asset. Now, what is the first definition? Intangible asset is what, sir? Intangible asset is an identifiable, non-monetary asset without physical substance. Yes, physical substance means we can't touch. Non-monetary means it is not realizable in fixed amount or determinable amount. It is under the control of the entity. It should be under the control of the entity. Control means what? Power to take future economic benefits and ability to restrict some other party to take the benefit. What does identifiable mean, sir? Identifiable means we can separate it and sell it. Separate it, we can transfer it, we can exchange it. Or it arises from a legal contract and have what? Future economic benefit. If all the five conditions are being met, we recognize this as what? We recognize this as what? As an intangible asset. As an intangible asset. Sir, if any one of the condition is not satisfied, directly into P&L under operating category. Yes. Then for MCQ, what are the important points here? Will market share be an intangible asset? No, bete. Market share is not an intangible asset. So marketing and advertisement is not an intangible asset because no certainty about future economic benefits. Staff training costs. Sir, we incur some staff training costs. That also will not be capitalized because we do not have control over the staff. Then any self-generated intangible asset. Do we record it? No, sir. Why we will not record? It is an asset. We will not record it because cost cannot be measured reliably. So, excuse me, internally generated brands are not recorded. in your pre-mock, there is a question regarding this self-generated intangible asset, an MCQ. Then the treatment. Combined asset, where intangible and tangible is combined. In that case, what should we do? Sir, if tangible asset is material, like in case of laptop, we purchase laptop is significant, tangible part is significant, so we recognize the full asset under IAS 16. Done, sir. If intangible asset is significant or material, then record the whole asset under IAS 38. Like when I purchase a DVD or a software. In that case, in a CD, I purchase a software. So the CD is what? Tangible. But here, significant part is what? Software. So the entire amount we recognize as intangible asset. If amount of tangible and intangible is material, if tangible is also material, intangible is also material, then what should we do, sir? We should allocate it separately. We should allocate it separately. And sometimes what we have seen that an intangible asset will be what? Intangible asset है हमारे पास. We have an intangible asset. This intangible asset is of low value. This intangible asset is either of low value or high value. But this intangible asset is required to run a PP, is required to run a PP or to operate a tangible asset. Then the entire thing, the entire tangible, intangible, we will treat as per IAS 16. It will be combined and a single accounting as per IAS 16, we will do it. Yes, sir. So principles of recognition we have discussed when the definition is being met. Probable future economic benefit, cost can be measured reliably. Simple. So measurement principle, initial measurement. So initial measurement is same like your IAS 16. Initial cost, subsequent cost, capital expenditure, revenue expenditure, we have to see it. Subsequent sir, cost model, revaluation model, same as per your IAS 16. But here some point is different which we have to understand for theory purpose. Then the same thing which we have seen. Then sir, coming to goodwill. Goodwill, internally generated goodwill, do we recognize? Internally generated goodwill we will never recognize because it is not identifiable. So purchase goodwill, do we recognize purchase goodwill? Yes, we will recognize purchase goodwill. Why we will recognize purchase goodwill? Because we are paying the amount and we know the amount we are paying, and we have seen this in IFRS 3 business combination. It arises from a legal contract. Internally generated intangible asset, will you recognize internally generated intangible asset? No, sir. Why we will not recognize internally generated intangible asset? Cost cannot be measured reliably. Cost cannot be measured reliably. That is the reason. So, what are the examples like goodwill, brand name, masterheads, publishing title, customer list? All these are not recorded. In your pre-mock, you have a question regarding customer list only. Whether you will recognize this as an intangible asset or not, you will not recognize better. Then, sir, sometimes research and development is done. So, research what we will do? So, research we will directly take to P&L, expenses of to P&L under operating category. So, development, the research expense we can capitalize it if the development criteria are being met. That is pirate. Pirate means what, sir? Future economic benefits, intention should be there, resources should be available, ability to sell, or then T, technically feasible. E means what? Expenditure can be measured reliably. Expenditure can be measured reliably. So when we will capitalize internally generated, or if there is a research and development done within the company, we can record this as an intangible asset if the private criteria are being met. Then, once and development expenditure is recognized into P&L, can we reverse it? It's not possible. If a development expenditure is recognized into P&L, we can't restate it as an asset. Sometimes it will be difficult for the company to separate whether it is research or development. They will directly take this to P&L operating category. Simple. Subsequent measurements of cost model, revaluation model. So cost model, revaluation model, same as per IAS 16. But what is the different understanding? Note, fair value should be determined by reference of active market. And it is very difficult it is very difficult to calculate the fair value of intangible asset. Why? Because there is no such active market. There is no such active market. That is the reason. So IAS 38 states that Active market for intangible asset is rare and specifically prohibits revaluation of patent, brand name, trademarks, publishing title, customer list, and masterheads. They say what? It is difficult to revalue these types of asset because active market is not available, especially for brand, trademarks, patent, customer list, copyrights. For MCQ, very important. So frequency, same. Revaluation, gain or loss, all the things are same as per your IAS 16, which we have already covered. Then coming to amortization. Everyone, when we will start amortization? Sir, amortization is what? Amortization is systematic allocation of amortizable amount. Amortizable amount will be what? Cost minus residual value over its useful life. So amortization starts when an asset is available for use. So whenever an asset is available for use, we start amortization. And I mentioned questions are there in the kit in your past papers. What is that? In some practical cases, commercial production is the first point when the asset is actually used, and management only consider it available for use at that point. So once the commercial production starts, from that day only we will charge the amortization. Amortization will stop when, sir, when the asset is held for sale or it has been derecognized. Sir, amortizable amount means what? Cost minus residual value. Sir, normally the residual value is zero. Normally the residual value for intangible asset is zero unless there is a commitment by a third party or there is an active market So what are the amortization methods? SLM, WDV, units of production method. But the first preference is given to what? The first preference is given to ratio of expected benefit. As it provides the benefit, record depreciation. Amortization does not ceases when an intangible asset is temporarily idle. If an asset is idle, we are not using it. Do we stop amortization on this? No, we will continue to record it. And amortization is recorded under operating category. Then, useful life, sir. If it is finite, we amortize it. Is indefinite, it's difficult to determine. In that case, annual impairment test is compulsory. MCQ, very important. Annual impairment test is compulsory, whether indicators are there or not. Then, sir, intangible assets which are not amortized, where annual impairment test is compulsory: goodwill, intangible asset with indefinite useful life, intangible asset under development phase. For all this, we do impairment annually, even though impairment indicators are not there. Yes, sir. So see everyone now. The 10th point, annual review of method of amortization, useful life, and residual value of intangible assets should be done. If any change, it should be considered as a change in accounting estimate. It is a change in accounting estimate as we have seen for IAS 16. It's very rare that the examiner will give a question here. If there is a change in estimate, the question is tested from IAS 16 point of view only. Then, sir, derecognition. When do we derecognize the intangible asset? Intangible asset should be derecognized on disposal. Once I dispose of, we will derecognize. When no future economic benefits are expected for its use or disposal. When there is no economic benefit from it. So, gain or loss on derecognition is calculated how? Net proceeds minus the carrying amount. So, gain or loss should be transferred to P&L operating category. For revalued asset, that revaluation reserve should be transferred to retained earnings once the asset has been disposed of. So with this, your this part is also done. Your then disclosure is that. What are the disclosure? General disclosure, sir. What is the amortization? Whether the asset has an indefinite life or finite life? What is the impairment loss? What is the research expense? What is the amount we have capitalized it? What is the revaluation gain if any active market is available? What is the value of government grant you have received for IS 38? So with this part is done. Any doubts to anyone? No? I want everyone to do this MCQ. Chalo. Everyone do this MCQ for me. Yes, yes. I want everyone to do the 15th MCQ. See here, everyone. A is engaged in research and development activities. During the year ended 30th June 2005, the company incurred a total cost of $750,000 on Project X, spending the same amount each month until the project was completed. Yes, sir. So from 30th June till 30th April, they are spending the amount. The product developed through this project was available for sale from 31st May. The completion is on 30th April, but it is available for sale from 31st May. It was determined that development criteria under IS 38 were met. Feasibility was established on 1st January. So feasibility was established on what date? 1st January. 1st January. The product is expected to have a useful life of 5 years. Now, same is sir. So, so from 1st January, we can capitalize till 30th April. So for 4 months, we will capitalize the amount. We have spent 75, 7,50,000, $750,000. This $750,000 is for 10 years. So each month 750,000 or 75,000 into 6, 4,50,000 will be taken to P&L. We will not capitalize. For 4 months we will capitalize. How much it will be? 75,000 into 4, that is 3 lakh. 3 lakh is the value of the intangible asset which we have recorded, we have capitalized. But the question is asking for the carrying amount. What will be the carrying amount? Now how will you calculate the carrying amount? So carrying amount, we have to charge amortization because the asset is available for sale. So 3 lakh divided by 5, that is 60,000. Now see here everyone, the asset was ready on April, but from 1st 31st May production is starting. There is a gap of 1 month. Will you charge amortization for this 1 month? No, bete. No, the amortization will be only for that 1 month here. Will be only for that 1 month. So 1 month it will be what? 60,000 into 1 divided by 12. It will be 5,000. So the amount which we have capitalized it what, sir? 3 lakh minus 5,000, that is 295. A is the option. So you have to keep this point in mind. So with this, your IAS 38 is done. So now we will be starting with your borrowing cost. We will start with borrowing cost and then take a break. Coming to borrowing cost. What does borrowing means? Borrowing means what? Taking money from someone, and cost means the expense. So cost is involved. So what should we do here, sir? So see here everyone. For MCQ it is very important. So borrowing costs are interest and other costs which are incurred. So other cost includes like discount, commission, transaction cost, redemption premium, coupon rate, which we have covered in IFRS 9 financial instruments. An entity incurs in connection with the borrowing of the funds in order to construct an asset. Yes, sir. It is included in order to construct an asset. Like your effective interest rate, interest on the lease, preference dividend is also what? A interest expense if that preference share is what? A liability. We have seen in IFRS 9, preference shares will either be what? Your preference shares will either be debt or either will be equity. Sir, if preference share is debt, interest is that. It is also considered borrowing cost. Sir, will return on equity be considered as borrowing cost? No. It's a notional thing. It will not be considered important for MCQ. Recognition. So borrowing cost normally we recognize in P&L. But the standard is saying if the conditions are being met, we can record this as an asset. Borrowing costs that are directly attributable to acquisition, construction, or production of a qualifying asset. If it is relating to acquisition, construction, or a production of a qualifying asset, we will capitalize. If not, expense into P&L. Which category? Financing category. Exam advice. It's an important advice. Qualifying assets. So what does qualifying asset means? Which takes a substantial period of time. Which take SP. What is SP? Is SP defined? Sir, SP is not defined. Generally, it is what? 12 months. Generally, it is what, sir? Generally, it is 12 months. It is 12 months. Yes, sir. So with this, the definition and recognition is done. Then coming to period of capitalization. So let us understand with the help of the timeline which we have used in our class. So see everyone. Sir, today it is 1st January and the Year end is 31st 12. So here, on this date, the loan is taken, sir. You have taken loan here. Once you take the loan, you have to pay interest to the bank. The bank will not say, okay, the loan you're using after 2 months or 3 months, you need not pay. You have to pay it better. Then I say, on this day, some expenditure is done. On this day, some expenditure is done. And here, on this day, some other requirement to be fulfilled to start the construction have been undertaken. So from what date we will capitalize? The interest we will capitalize from later of these 3 dates. Later of 3 days. What are these? Later of 3 dates. The first date is what? Your capitalization will start from what? Your capitalization will start from later of 3 dates. That is when expenditure is incurred, borrowing cost is incurred, and activities which are necessary to make the asset for its ready for its use or sale, we will consider it. Simple. When coming to suspension, sir, can we stop capitalization? Yes, better. We can stop capitalization when development is not there. When development is not there. When development is not. But still, if development is not done for 15 days, 20 days, 1 month, due to a process which is necessary for that asset, like whenever construction is done for 15 days, 20 days, the construction will not carry because watering is required for that cement to be good and strong. In that case, for that period, still we will continue to recognize what? We will do the capitalization. So, or during a period when substantial technical work or administrative work is carried out. If so development is not done, but some other activity is going on for that asset, still we will capitalize it. Some technical and administrative work is carried out. So for suspension, you have to keep in mind, if it is normal, if it is normal, we capitalize. If it is abnormal reason, then we will ignore it. We will take it to P&L. Simple. Then cessation of capitalization. When will you stop capitalization, sir? Sir, we will stop capitalization once the asset is ready. So, do we consider minor modifications? Minor modifications are ignored. We will not consider minor modifications. Yes, sir. So, with this part is done. I hope there is no doubts in this. Capitalization of borrowing. There are two types of borrowing. Question comes for your section A, very important. Specific borrowing, general borrowing. So, for specific borrowing, what is the formula? Funds borrowed specifically for qualifying asset. If I have a qualifying asset means which takes substantial period, that is 12 months or less than 12 months depending upon the company's judgment. So whatever is the actual borrowing cost less any temporary income. If I have any temporary income, I will reduce it here. We will reduce it here. So see everyone, let us do this question regarding your specific borrowing. A company took a loan of 5 million at 9% on 1st January 2000 X4 to finance the construction of a qualifying asset. Construction began on 1st March 2000 X4 and was completed on 31st December 2000 X4. A company utilized 2 million on 1st March and the remaining 3 million was utilized on 1st September. The surplus was temporarily invested at a rate of 5%. Now everyone saying the loan is taken today but the construction is starting on this day. So can I say for this 2 months where will you record the interest expense? In P&L, sir. Sir, in this 2 months we have invested the funds and we got income. That also will go to P&L. Simple. From this day, from 1st March, we will capitalize it. We will capitalize it. So on this day, we are using 2 million, 3 million. So can I say in specific borrowing, do we see the date when the fund is used? No. We will take the entire amount. That is 5 million into 9% into 10 divided by 12. You get 0.375 for 10 months. Then, sir, less temporary income. Now, this 3 million for how many months it was invested? Sir, the 3 million was invested from this date to this date. That is March, April, May, June, July, August. Yes or no? It was invested for 6 months. So 3 million into 5 percentage, 6 divided by 12, 0.075. We reduce it and we get 0.3. This is the amount which we have to capitalize. We have to capitalize this amount. So what will be the carrying amount of the asset? 5 million plus 0.3, that is 5.3 million. 5.3 million. What is the amount that will go to P&L? So 5 million into 9, that is 2 by 12, 0.7, 0.075, and 5 million that was invested for the 2 months into 5% into 2 divided by 12. This also will go to P&L. So with this, your specific borrowing is done. Then coming to general borrowing. Sir, in general borrowing, what should we follow? In general borrowing, first we calculate what's a weighted average cost of capital. We calculate the average rate here. That average rate we use to calculate the interest expense. We use it to calculate the interest expense. Yes. So we calculate the capitalization rate. Then step two is what we calculate the actual interest. How do we calculate the interest amount? So whatever is the expenditure which we have incurred into the capitalization rate. Here we see the date when the funds are used here. So the date when the funds are used, we consider here. We do time apportionment here. We consider time apportionment here. Yes, sir. So let us see one question which we have already done in our class. So see here now. So what is the 10% is 9.5. So the first is what we calculate the capitalization rate. That is 120 into 10 percentage, 80 into 9.5 divided by 120 plus 80 is the closing value. So we get capitalization rate of 9.8. Now on 1st January we are using 30 million. So what is the amount? For how many months the interest will be applicable? It will be for the full 12 months. So 30 million into 9.8 into 9 by 12. Then so this 30 million is for 12 months, and this 20 million is only for 3 months. So see here now. So 30 million is for 12 months, 20 million is for 3 months. Then we get the value here. The 3.43 is the amount which will be capitalized. So with this, your IAS 23 is also done with questions. As disclosure part is done, let us see some important notes. Always we will use what? First specific borrowing, then we will use general borrowing. Borrowing cost capitalized cannot exceed actual borrowing. My interest expense is 1200. Can I can I add the interest to be capitalized more than 1200? It's not possible. An inventory manufactured in large quantities on repetitive or short-term basis will not be considered as a qualifying asset. For an inventory to be qualifying asset, it should take a substantial period of time and it should not be repetitive or on a regular basis. Simple. Asset ready for the intent use or sale. Today I have taken a loan, I have purchased a building, from tomorrow only I can use it. It's not a qualifying asset. Then qualifying asset will not be asset which are at fair value, like your IS 41 biological asset. Borrowing cost will not include the notional cost of capital. As I mentioned, the return for equity shareholders will be ignored. Disclosure. So what are the disclosure? Capitalization rate and the amount of borrowing cost capitalized. These are the things which we consider. So with this, your borrowing cost is also done. So 4 standards we have completed. Now we will take a break, come back and do your IAS 20 government grant, IAS 36, IFRS 5. Then again we will take a short break, do IAS 2 and IAS 41. So the time is 7:25. Everyone be back by 7:35. Chalo, chalo, everyone come back. Chalo then, let us start with government grant. So, IAS 20 government grant, a very important standard. In your pre-mock, there is an MCQ regarding government grant also. So, you have to be a little bit careful when doing this government grant. It's very simple. There are two methods: deferred income method, reduction from the cost of the asset. Let us discuss that now. Chalo, everyone. IAS 20 accounting for government grant and disclosure for government assistance. Whenever government assistant is there, for government assistance, do we do any accounting? No, only disclosure is done. For government grant, both is done. Accounting plus disclosure is done. So grant means what, sir? Anything that government is giving you for free of cost. The government can give you a cash, or the government can give you something in cash or something in kind. Kind means some asset, etc. The government can give you, simple. Then, sir, government grant will be applicable to what, sir? Accounting and disclosure of government grant, disclosure of other forms of government assistance. It will be not, we will not apply government grant to IS 41 because IS 41 has its own thing. Yes, yes, I'll share the notes, you can use it. I'll share it, no issues there. Definitions. What are the definitions? See, everyone. Now, will government grant apply to participation in ownership? If government has a participation in your company, will government grant apply? No. MCQ important. Any tax benefit from the government, like income tax holidays, reduce income tax, it's not any government grant here. Understand that. Government refers to what's a national, local, etc. We have discussed this. It's not important. Government grant means what? An assistance by government in form of transfer of resource to an entity in return for past or future compliance. Either we have done something good in the past, or in future we are doing good, the government is helping us. Government assistance means what? It is an action by the government to provide a economic benefit specific to an entity or a range of entity qualifying under certain criteria, like free technical advice, marketing advice, providing guarantees. All these are the example for government assistance. So government assistant, do we do anything? Government assistance, do we only do disclosure, not accounting. So will government assistance includes indirect benefit that is provided to public at a large, like road facilities, fuel prices are reduced? Nahi baba. Excuse me. These all are not included. Yes, sir. Why government assistance is not recognized? Because it cannot be calculated, or it is not identified properly. We can't know the amount. That is the reason we only disclose in the notes to account. So, what do we disclose? What is the benefit? What is the nature? What is the time period for which the government has given the benefit? Government grant related to asset. Whenever we say grant related to asset, that means what? It is a capital grant. The government has given a grant to purchase any asset, to construct any asset, etc. Grant related to income means what? The government has given a grant other than capital grant. Like the government is saying that you employ three staffs from a village, the salary will be 10,000, 10,000, 10,000. We will pay 50% of that. Okay, no issues. Then coming to the recognition. Sir, when should we recognize a government grant? Government grant will be recognized when there is a reasonable assurance. When there is what? Reasonable assurance. That entity will comply with the conditions and grant will be received. So whenever we do government grant accounting, do we consider the date when we receive the funds? We will never consider the date when we receive the funds. We see the matching principle and do the accounting. A question is there in your pre-mock regarding matching principle only. Then, sir, what type of government grant? Then, revenue grant, capital grant, we have discussed. So, what is the accounting treatment? What is the basic accounting treatment? The basic accounting treatment is debit, credit, cash, or receivable, credit, deferred income. This deferred income, we will recognize this as a liability because, sir, if we will not fulfill the condition, we have to pay to the grant, to the government back. That is the reason. So, see now, grant relates to asset. Whenever the grant is there and which relates to asset, how can we account it? Method number one is what? Reduction from the cost of the asset. 10 CR is value of the asset I purchase. minus 1 CR is the grant. It is what? 9 CR is the value of the land which I recorded. And if it is a PP, I record it at 9 million or 9 CR, I depreciate it normally. Yes, sir. The method number 2 is what, sir? The method number 2 is deferred income. So instead of recording the full amount into P&L today, we recognize this liability and slowly we take into P&L over the period. Over the period. So in that case, what is this? It's conditional. It is based on a condition then. So whenever it is a depreciating asset, we will take this into P&L. We will take this into P&L. On what basis? On the ratio of what? Based on the depreciation ratio. Based on what's a depreciation ratio, that is useful life of the asset. Sir, if it is a non-depreciable asset like land, in that case, what we will do, sir? Some other condition will be there. Some of the other condition. If the government is giving you 1 CR to purchase the land, the government will say do business for 40 years. So 40 years we will take into P&L slowly, slowly. Yes, sir. Sir, if it is unconditional grant, what we will do? Condition is only not that. Directly take to P&L. Directly take to P&L. So this is the journal entry. See, debit asset credit bank. Then when we purchase the asset, then debit bank or grant receivable credit deferred income. And this deferred income is a liability we take into P&L over the years. Deferred debit, deferred income, credit, P&L. We reduce the liability and we take this P&L. This we take the amount to P&L as an income. Which category, sir? Other operating. In operating category under other operating income head. This liability we have to further divide into non-current liability and current liability. We have to divide it further. We have to divide it. Sir, what will be the current liability part? Current liability part will be what? The amount that is taken to P&L. The amount that is taken to P&L in the next year. The amount which is taken to P&L in the next year will be current liability. So the remaining will be what? Non-current liability. So what is the mistake you will do? Read the question carefully, better. Read the question carefully. If the question is saying that we have received the grant on 1st June 2000 X1 and year end is what? 31st 12. So what we will do? For 7 months we will recognize in P&L? Yes, sir. 7 months we will recognize in P&L. So the current liability will be what? The amount which is taken for the next year full. And the remaining will be what? Non-current liability. Do not take full 12 months into P&L straightforward 9. Only 7 months you have to take into P&L. So see the date when the asset is purchased and when the asset is used. So we will not see the date when the cash is received. We see the date when the conditions are being met and the date when the asset is purchased. Now a question to everyone. Let me test you. I say today it is 1st April 2000 X1. I got the grant of 20,000 or 2,000. I purchased the asset on 1st October 2000 X1. Now everyone say how many months depreciation you will record in the P&L? How many months depreciation you will record in P&L? Year end is 31st 12. How many months depreciation? Say me. Year grant is received. Year asset is purchased. So can I say for 3 months we will recognize depreciation expense? Yes, sir. Now everyone, for how many months you will recognize deferred income? Will you recognize deferred income for 9 months or will you recognize deferred income for 3 months? Question. Chalo, say me. For how many months you will record depreciation? You mentioned 3 months, sir. But for how many months you will recognize the deferred income? Okay, one is saying 9. Others?
9, sir.
9. Okay, everyone is saying 9. Is it 9? It is 3, better. It is 3. I mentioned what date when the grant is received, we will not consider. We have received the grant here. Debit, credit, sir. Debit, what is this? Bank, credit, deferred income. You say ki sir, we should recognize deferred income for 9 months. No, bete. Why this deferred income is relating to this asset? And this asset was purchased on what date? On this date. And deferred income is recorded based on the what ratio? Depreciation ratio. So depreciation is only for 3 months. Then deferred income also should be for 3 months. No. Deferred income should also be for 3 months. Do not take it for 9 months. This is one mistake which you will do. The second mistake what you will do is what? See here now. I say the asset was purchased here. Asset is purchased on 1st April 2000 X1. Yes, sir, for 2000. And on this date, government has announced that we will provide a grant. And it was reasonably certain that we will receive the grant. Today I was knowing that I will receive the grant, but government did not credit into my bank account. After, let's take on 1st October 2000 X1, I received the grant here. But it was reasonably certain here that I will receive. So depreciation for how many months, sir? 9 months. 9 months. It was reasonably certain that I will receive the grant on this date. Then for how many months will I record deferred income? Say me. How many months I will recognize deferred income? 9 months. You will recognize the deferred income for 9 because it was reasonably certain here. So you have to consider both the things. Reasonably certain also and the asset thing also. Both the things. So these are the two areas where you will make mistake. So avoid silly mistake in these areas. Yes, sir. So with this, your government grant for asset is done. So, sir, deferred income, it is liability, non-current and current liability. So, current liability is what? Amount that is amortized to P&L for the next 12 months. So, non-current liability will be what? Total liability minus current liability. Total liability minus current liability. Yes, sir. Sir, if it is non-monetary grant, that means grant is not given in the form of cash. It is in the form of kind. The government is giving in a form of kind, like any asset, etc. In that case, what should we do? Today, the government has given a PP today to me as a in grant. How will I record it? So see here now. The first approach is what? Fair value. Fair value. So what will I do? Debit asset, credit deferred government grant. I will record this at fair value of the asset. So this fair value of the asset, we will depreciate it normally. This 10,000 I will record into P&L based on what? Depreciation ratio. Based on depreciation ratio. So the priority should be given for fair value. I have not seen any MCQ regarding this. The theory question can come. Sir, if fair value is not available, sir, can we use nominal approach? Yes. Nominal approach says what? If fair value is not available, we follow nominal amount approach. That is, we recognize the grant and asset at a nominal value, 1 rupee, 2 rupee, $1, $2, etc. For theory, it is important. Yes, sir. So with this, the capital grant is done. Capital grant is done. So let me show you the calculation also. How will you see here now. An entity has opened a new factory and on purchase of capital equipment costing $100,000 and government grant receive 15,000. They follow both the methods and depreciation is what? 20% SLM. Even though 20% is given, it's not WDV, it's SLM. Yes, sir. So I will recognize asset at this value. Yes, sir. And grant of 15,000. This is deferred income method. So 20% I will take to P&L. So 20% also I will take to P&L. No issues in that. Yes, sir. So I say in P&L depreciation will come, grant income will come. My non-current asset will be what? 21 lakh, $100,000 minus 20,000, 80,000. Sir, out of this remaining, sir, out of 15,000, I've taken 3,000 to P&L. Remaining is 12,000. This 12,000 I have to separate it. So 9,000 into what's a non-current liability? Current liability will be what? 30,000. Simple. So reduce from the cost of the asset. If I reduce from the cost of the asset, 100,000, 100,000. So from the first day only, I will reduce it and I will record my asset at 85,000. This 85,000 I'll normally depreciated 17,000 in P&L. Non-current asset will be 68,000. See, in the P&L, if I see my net impact is 17,000, but the presentation way is different. The presentation way is different. It is an accounting policy. It is what's our accounting policy. There are two different accounting policies, two different methods or approach to show this. Yes, sir. Then coming to the grant related to income. Sir, government grant related to income. In that case, what will happen, sir? Grant related to income. Grant given by government to entities that provide support for expenses like staff training expenses. We are protecting the environment. We are doing good for the society, etc. Sir, it is unconditional grant. Whenever it is unconditional, directly take to P&L and dump it. Under which category? Other operating income. Why we say other operating income? Because grant is provided for business purpose only, not for investment purpose. Sir, if it is conditional grant, then what we'll do? Sir, debit bank or grant is a credit deferred income, and this you will take to P&L as the conditions are being met. So this we will take into P&L in the expense ratio. Yes, sir. So what we can do, sir, either in P&L we can record this separately or we can offset it. We can do the net off and record it. Net off and record it in the books. So with this part is also done. Grant related to income. So with this, both the grant, capital grant and revenue grant is done. Now coming to the next important topic, that is repayment of grant. A very important topic. See everyone, first case, repayment. It is unconditional grant. Whenever it is an unconditional grant, what do we do with him? Unconditional grant, we directly record into P&L as an income? Yes, sir. After 1 year, the government is saying that repay us back. It was unconditional grant. Directly you record into P&L, the government is saying pay back. So what will you do? You will reverse the entry. Debit P&L, credit cash, reverse it. Simple. Then the case 2. Case 2 is what? Deferred income. In deferred income method, what we will do? Listen here, everyone. 10,000, here 8,000, here it became 6,000 because 2,000 I have taken into P&L as a income. See, I got 6,000. After 2 years, the government is saying repay the amount. The government is saying what? Repay the amount. So the government is saying that repay 6,000. If the government is saying repay 6,000, what will you do? You will say cash is going out 6,000. So grant also will reduce. This deferred government grant will reduce by 6,000 because there is no more liability on your head. You are paying the full amount. If the government is saying that pay 10,000 back, so cash is going out of 10,000, but this deferred government grant of liability I will reduce first. I will utilize the deferred government income balance. I will remove that and the remaining will be recorded in P&L as an expense. The remaining will be recorded in P&L as an expense. Simple. Yes, sir. This is case number 2. So the case 1 we have done, if grant was recognized as a income in P&L, if grant was recognized as a deferred income, yes, sir. If grant has recognized by reducing the cost of the asset, what should we do? In that case, let us understand. Reduce from the value of the asset. Whenever you have taken the grant, you have reduced from the value of the asset. How will you do the accounting? Sir, 10,000, 2,000 was the grant, 8,000 was the carrying amount of the asset. We have depreciated this for 5 years, 1,600, 1,600, 1,600. So the carrying amount came to what? 3,200. 3,200. What is the depreciation you have recorded for 3 years? 4,800. Now the government is saying that repay this. Government is saying what? Government is saying today to you, repay this amount. Repay. So the government is saying that repay the full 22,000. The government is saying repay full 2,000. Now you only say when you repay, it will affect what? So it will affect the cash is going out by 2,000. Yes, sir. What should you do? In case of reduction from the asset, if repayment is done, calculate the value of the asset. If the grant was not received, assume that the grant was not received from the day one only. Assume that the grant was not received from the day one. So what will I do here? So 10,000 divided by 5 years, that is 2,000 depreciation. So 6,000 is the depreciation. My carrying amount will be 4,000. But what is my carrying amount? My carrying amount is this one, 3,200. So I'll increase my carrying amount of the asset by 800 by 800. And debit, what will I record? Debit I will record in P&L as a depreciation expense because I had to record depreciation of 6,000, but I'm recording only 4,800. Additional depreciation is there, yes, sir. That is going to P&L. Simple. This was the repayment ka case. Here in the we have discussed this in the notes also. It was written properly, each and every point with an example also. So with this is done. Yes, sir. Then coming to the next part for MCQ purpose theory. If government has given a loan today to you and you are not paying it back, okay, government is saying okay, no need to pay. We have forgive your loan. You need not pay. In that case, what we will do, sir, that loan which we are not paying back to the government and the government is saying you need not pay back, in that case that amount we recognize in P&L as a gain. We remove the loan amount as a liability, we remove the loan account, we recognize into P&L as an income. Calculation will not come for theory, I'm saying. Yes sir. When will you recognize this as an income? When there is reasonable assurance. When there is what? Reasonable assurance that the entity will meet the terms for the forgiveness of the loan. Whatever are the conditions, you have to meet it. Concessional loan means what, sir? Sir, today in the market, the loan is for 8%. The interest rate is how much? 8%. Government has given us a loan at 4%. Now you only say what is the difference of 4%? Let me change here the number. Government has given a loan today for you for 3%. That 5% is what, sir? That 5% is your benefit. That 5% is what, sir? Our benefit. So where will you recognize this benefit? You will recognize into P&L. Calculation not tested, only have a idea in your mind for theory purpose. So with this, your what are the disclosures? Accounting policy. What is the presentation method? Whether we have reduced from the cost of the asset or whether we have shown it as a deferred income method. So with this part is done. I hope this is clear to everyone. This was a question which you had to do in a question bank regarding 22 question where they have mentioned the date the grant was received early but the asset were purchased after that. You have to keep in mind. Let us do this question. See now, A prepare its financial statement to 31st October to each year. During the current year, A secured and received a government grant totaling to $720,000 to support the digital upskilling of its workforce. Okay, out of 720,000, this is involved for digital upskill. Yes, sir. So 120,000 relates to the investment in new IT equipment, and the remainder is for IT support. Out of this, 120 is for capital equipment, and the remaining 500,000 is for what, sir? Training of the employees. For period from 1st April to 31st March. From 1st April to 31st March. The grant was received on 30th June. Do we consider the date when the grant is received? We will not consider the date when the grant is received. We will see whether it is reasonably certain or not. Reasonable assurance is there or not. It is that we will do it. A fully intends to comply with the conditions of the grant. They are saying that A will fully comply to the conditions of the grant. It purchased the new IT equipment on 1st April only as required and commence trading with immediate effect. From that day, 1st April only they are doing. But the grant was received on 30th June after 3 months. Will you do the accounting after 3 months? No, better from today only we will do it. A deducts the grant related to asset from the carrying amount of the asset. They deduct it. So see here now 720, this and this. So this okay, it is not 5 lakh, it is 6 lakhs. Sorry, my bad. So this 6 lakhs or 600,000, we will recognize this as an income for 2 years. Yes, sir. 2 years. So how much is the income for 1 year? 3 lakhs, sir. And for how many months I'll record? April, May, June, July, August, September, October. 7 months I will recognize into P&L as an income. So 1,75,000 will be my P&L as an income. Yes, sir. What is the question? What amount should be recognized in non-current liability? If this 120,000 is deducted from the value of the asset, will there be any deferred income? No deferred income, no liability. Sir, out of the 6 lakhs, how much is the value we have recognized in P&L? 1,75,000. So what is the remaining, everyone? The remaining is what? 425. Out of this 425, they are asking what is the non-current liability. Do not blindly tick C option. It is wrong. They are asking non-current. So non-current liability will be what? Out of this, current liability, non-current. Sir, current liability is what? The amount that is taken for next year. Can you say next year full amount will be taken or not? Because next year will be full. So 3 lakhs is taken to the next year full amount. Yes, sir. So the remaining will be what? So the remaining will be what? That is 125 will be a non-current liability. That is option A is the right answer here. Option A is the right answer here. Avoid all silly mistakes in your exam. Yes, sir. So with this, your government grant is also done. Any doubts to anyone? Huh? I hope it's not fast. Yeah, it'll be little bit fast, but it's only revision. It's not that we can discuss in detail, etc. But I'm trying to cover each and every point. It is difficult that I cover. It is very difficult within the time which we have to cover each and every point, small mistake also. Now coming to IS 36, a very important standard, a very, 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 very important standard. Yes, sir. You will get the recording. The recording will be uploaded on YouTube channel. Previous batch, September batch, also the recording is uploaded on YouTube. On my channel, you can search Rahul Sirvi or you can search for Super Infinity Education. You will get it. Previous batch also. In previous batch, I have not taken questions. So this batch, I'm trying to take questions and the mistakes where you will do. Impairment of asset. So what does impairment of an asset means? Impairment means the value of the asset is decreasing. Sir, how we will get to know? How we will get to know? We compare carrying amount and RA. We compare carrying. So the carrying amount is more, RA is less. What is RA, sir? How can you recover the value of the asset? Either we can sell in the market or either I can use it. There are two methods. Other than this, nothing. So impairment, why impairment is an MCQ question? Why do we do impairment? To ensure that the asset is shown at its true value, not more than the RA. Sir, impairment will not apply to what all? Impairment will not apply to inventory because it is covered in IS2. Deferred tax asset, it will not apply. Contract asset, it will not apply. Your IFRS 15. Financial instrument, it will not apply. It is part of your SBR. Investment property measured at fair value. Investment property measured at fair value, no impairment because already that impairment will be considered in fair value only. Non-current asset held for sale. IFRS 5, it has its own rules and regulations. Biological asset under fair value less cost to sell will not apply impairment to this. Yes, sir. For MCQ, this is also MCQ theory. Then the next type of theory question. Impairment is not done directly. In your MCQ question, true or false? Is impairment done directly? False. At each reporting date, assess whether there are indicators or not. Indicators will be there. First indicator hint will be there. Sir, if indicator or hint is there, yes, do impairment test. In impairment test, what do we do? We compare carrying amount and RA. So if the carrying amount is more, RA is less, asset is impaired. No means asset is not impaired. If hint or indicators are not there, no impairment test. Simple. So impairment test, what do we do in impairment test? We compare RA and CA. Sir, CA is more, RA is less, impairment. So CA is less, RA is more, no impairment. What is RA, sir? From that time I'm saying RA. RA is fair value less cost to sell or value news. Read the MCQ properly. In our regular test series also we have done what? If you say RA is higher of fair value and value news, it is wrong. Fair value less cost to sell. You will be in a urgent. So read the question carefully. Yes, sir. Then impairment indicators. Sir, what are the impairment indicators? There are internal indicators, external indicators. Again, for theory, a question could come. They will say identify which is internal, which is external, whether it's an indicator or not. First one, evidence of obsolescence or damage of an asset. See, the asset has been damaged. So internally we get to know. So the economic performance of the asset is not as same as it was in the previous year past. The economic performance is declining, sir. Significant adverse changes in the extent or in the manner in which the asset is used. We are totally changing the use of the asset. That is also an indicator, sir. Sir, external indicators, significant decline in the market value. So the market value is coming down significant. It is an indicator. Sir, interest rate is increasing. Sir, if interest rate is increasing, what will happen? If interest rate is increasing, discount rate will increase. My value news will come down. My value news will come down. It's an indicator for impairment. So market capitalization is lower than the carrying amount. So market capitalization is lower. My net assets are more. Market shareholders are saying your value of the company is less, but I am keeping it more. That is wrong, sir. That is wrong. It's also an indicator. Then significant changes in technology, market, economy, which have an adverse effect. If it has a positive effect, will it be an indicator? Nahi, Baba. If it has positive impact, it's not an indicator. It has an adverse impact, indicator. So read the question carefully, MCQ questions. So with it, this is done. Sir, what are the three things where annual impairment test is done compulsorily? Goodwill, intangible asset with indefinite useful life, intangible asset under development phase. For these three things, we have to do impairment compulsory, even though hints or indicators are not available. Yes, sir. Then coming to fair value less cost to sell. Sir, will detailed calculation come? How to calculate fair value less cost to sell? No, Baba. Fair values as per IFRS 13, cost to disposal you have to consider. So cost to disposal means what? See, now, cost to disposal means incremental costs which are directly attributable to the dispose of an asset. Will it include finance cost and income tax? No. MCQ important. It will not include finance cost and income tax are ignored. So what are the examples? Like legal cost, stamp duty, cost of removing the asset. All are the examples for what, sir? Are the examples for your cost of disposal. Sir, will the professional value or fees be included? No. MCQ we have done and MCQ also in your test series as well as in the normal class, that professional fees which we pay to a valuer who calculate the fair value is not considered, it is ignored. Simple. Yes, sir. Then coming to value in use calculation. Sir, in value in use calculation, will calculation come? No, Baba. It's part of the SBR. In SBR also, this never comes calculation. But theory question, MCQ question comes in your exam. Value in use. This value in use, how we will calculate. So value in use, we take future cash flow, we discount it and calculate it. So what are the cash flows we have to include? What is the discount rate? See now. Cash flow will include what, sir? Today I have a machine, I am getting income from that. The residual value, the scrap value also will be part. Then day to day some repair cost is required to maintain this asset so that it can produce products or in the goods or service in the future. In that case, that also will be considered. Any cost which is necessarily incurred to generate cash flow from continuing use of the asset is included. So what are the cost? What are the cash flows which are excluded? Future cash flows are excluded, which we have not yet committed. We say, ki, sir, in future, after 3 years, I will invest 50,000 on this asset. From that 50,000, I'll get 20,000, 20,000 each year. Everything you have to ignore. We have to ignore because value in use. Why are we ignoring? Value in use calculates the value of the asset as per current condition, not as per future condition, what you will do, etc. Then we will exclude finance cost and income tax. Simple. So what is the interest discount rate? Discount rate is pre-tax cost of capital. It will consider the time value of the money and risk specific to the asset. That pre-tax cost of the capital will include time value and risk specific to that asset. Yes, sir. So see here, future cash flow projection. Sir, when we calculate the cash flows in future, what are the points we have to keep in mind? Five important points. The cash flows, the assumptions should be reasonable and supportable. Reasonable and supportable assumptions should be considered. Sir, we should use the recent budgets and forecast. Current year or previous year we have to use to project the future cash flows, not the historic one. Maximum of 5 years cash flow we can take. Sir, can we take cash flow more than 5 years? Yes, if it is justified. Excuse me. So growth rate should be steady. The growth rate should be steady. Yes, sir. Then, so the growth rate should not be more than the long term average. It should not be more than the long term average. A simple thing. So with this, your value news part is done. A small part which you have to concentrate. Again, it's a revision. See now, cost to improve or upgrade the asset. I want to improve or upgrade the asset. It's not included, excluded. Cost for future plans not committed. If you have not committed to the future plans, you can't include. If it is committed, yes, we can include it. Proof evidence is required. Yes, sir. Simple. Then liabilities are excluded, finance cost, taxations are excluded. So the steps to calculate any question. Now coming to the calculation part. Step one is what asset should be impaired. Whether check asset is impaired or not. Compare carrying amount, RA, you'll get to know. Impairment loss is that so carrying amount minus RA. Impairment loss. Now impairment loss where we will recognize. Sir, impairment loss is generally recognized in P&L. Impairment loss is generally recognized in P&L. Is generally recognized in P&L. Yes, sir. However, if there is any balance in revaluation surplus, any OCI balance is there relating to that asset, we can use it. So generally, impairment loss is recognized in P&L. Sir, if we have OCI balance, can we utilize it? Same principles as per your IAS 16. OCI balance is that relating to that asset, huh? If that asset has, use it. If some other asset has, no. You should not use it. Then we get a reversed carrying amount. carrying amount before impairment loss minus impairment loss, you get the new carrying amount. So for future depreciation, when we calculate the depreciation for the future years, this new amount should be used for calculating depreciation. So see the journal entry under cost model. So impairment loss directly to P&L, reduce the value of the asset. Simple. So revaluation model, utilize the OCI balance first, relating to that asset only. Debit. Debit what? Impairment loss. If any excess is that P&L. Credit value of the asset. So where will record impairment loss? Impairment loss. If it is intangible asset or PP, operating category. If it is investment property, cost model, investing category. Simple. So with this, your this part is done. Yes? Chalo then. Then coming to the next part, that is CGU. Here I will say what are the tricky areas, three mistakes you should avoid in your exam also here also. So CGU, what is CGU, sir? Cash generating unit. Why do we apply the concept of cash generating unit? Theory question. Because sometimes it is difficult to calculate the RA. It is very difficult. It is difficult to calculate the RA of a particular asset because it will not generate independent cash flow. So what we will do, we will combine it. We will form a group of assets. So in my case, will I be able to calculate the RA for this pencil? Not possible. Will I be able to calculate the RA for my iPad? No. But can I calculate the RA for my teaching setup? Yes. So my teaching setup will become what? A cash generating unit. So what is CGU? CGU is the smallest identifiable group of assets that generates cash flow which are independent when compared to the other assets in the company. And whenever we do the aggregation, whenever I combine the asset, the aggregation should be lowest as possible. So this was the example which we had taken in the class: iPad, mic, camera, keyboard, monitor, PC, etc. Yes, sir. See everyone, yes, yes, yeah. The method to calculate impairment for CGU. Sir, calculate the carrying amount, calculate the RA of the CGU, calculate impairment loss. Then how should we allocate the impairment loss? Sir, we will allocate the impairment loss first to what? Goodwill, any specific asset, and then other assets on the pro rata basis. On pro rata basis. On pro rata basis. Simple. Pro rata basis. Everyone, see here now. Question number 3, question number 4. What is the mistake you will do in the exam? Listen here. There is a CGU 100, 200, 300, 500, 1500, 2600. The fair rule less cost to sell, etc. They have given. My RA is how much? 1950. So my impairment loss is how much, sir? 650. This 650, how will I allocate? Let us read the other points. Half of the machines were completely destroyed, but the remaining half can be sold for at least their carrying amount. Now you only say, bete, if half of the machine is impaired and the remaining half can be sold for the carrying amount, will we charge impairment on that remaining carrying amount? No. This is the mistake you will do in your exam. Listen here. See now, sir, impairment loss was how much, sir? 600. Out of this 650, will I allocate the impairment to anything? Okay, nothing is that. And the patents have become obsolete. They are saying the patents have become obsolete. There is no value for that. Okay, sir. So any impairment, first to goodwill 100 I have allocated, yes sir. Then for patent I have allocated 200. So the remaining is what? 350. Out of this 350, they mentioned that the remaining half of the machine has been impaired. So out of this 300, how much is the half? So 150. So I've recorded 150 here. So my remaining is what? 200. This remaining 200 I should allocate to machine, computers and building, you will say. But in the question they mention what? The remaining machine can be sold for what? The remaining machine can be sold for the carrying amount. If the remaining machine can be sold for the carrying amount, Will you charge depreciation? Will you charge impairment for the remaining 150? No, the value will remain same. The value will remain same. So this 200 you will allocate on this computer and building one. Computer and building. Yes, sir. Then see the next question. Same question, but what is the difference here? The difference is that patents have become obsolete. Half of the machine were completely destroyed. Have they mentioned anything about the remaining 50%? They have not mentioned here. If they have not mentioned that the half of the machine can be sold for what? Half of the machine can be sold for their carrying amount. Will there be impairment? No, sir. But here nothing is mentioned. If nothing is mentioned, for that remaining half also we have to charge impairment. Sir, impairment was 800 minus 100 for goodwill, 300 minus patent. Yes, sir. Do we allocate for inventory and cash? No, sir. Out of the box. Simple. Then the machine, out of this machine, 50% has been this. So 100. So remaining is what, sir? 100. Now the my remaining impairment is 300. This 300 I will allocate to building. I will allocate to building, computer and machine. I will allocate to 3 also. Why? The question was silent here. Nothing was mentioned. In the question, nothing was mentioned. So I allocate it to each and everything. So with this, the CGU part is done. Now one more question to everyone. If the question is saying 100, 300, 200, 300 and 1700, 150. The question is also saying that here, the question is also saying that the building has RA of 1800. If building has an RA of 1800, will you charge impairment? Same here everyone. Common sense ये तो. Separately a note is given saying building has a RA of 1800. Will you charge impairment to this building? Yes, no, you will not charge. This is the mistake you will do in your exam. You will not charge. Understand that. Simple. Do not do this mistake. Sometimes they'll mention a note saying that building has a, they will give you CGU, they say building and this one. Then they'll give some specific asset, you have to charge and do it. Three areas, be careful. Other than this, examiner will not ask you anything from CGU. I guarantee that. Yes, sir. So with this, your impairment part for CGU is done. Yes, sir. Then coming to reversal of impairment. Sir, can there be impairment reversal? Yes, but impairment reversal can be there. Sir, can goodwill be reversed? Once impairment has been charged on goodwill, can we reverse it? No, it's not possible. MCQ, keep in mind. Sir, will there be any indicators? Yes, there will be positive indicators. Whatever we have seen for negative part, it will be ulta, it will be reverse here. Reversal of impairment loss. But what is important? Listen here. So whenever there is a reversal of impairment, can we increase the entire amount? No, there is a restriction. A ceiling limit is that. A limit is that. That limit you can't cross it. You can't cross that limit. So what is that limit? CN. Reversal of impairment loss is restricted to lower of following. RA on the date of reversal. On the date of reversal. So RA on the date of reversal. On the date, what is the RA? And then carrying amount if impairment was not there in the previous year. Same like for IS 20 we have done. Carrying amount if no impairment was there in the earlier years. Yes, sir. Then calculate these two amounts. Whatever will be the lower out of these two, one amount will be lower. Maximum to that amount only you can record your impairment reversal. See now, a reversal of impairment loss is recognized in P&L unless the asset is carried under revaluation model. So what we will do, so whenever reversal is there, take it to P&L. Sir, if it is cost model, sir, if it is revaluation model, what should we do? If it is revaluation model, what should we do? First, impairment reversal will be done in P&L, then access to OCI. Why? The logic is what? I had explained in the class also the logic, if you remember. So, logic. See now, whenever you record impairment loss, if you recognize in OCA, revaluation surplus is there, you record, use it, and then you record excess impairment loss in P&L. Now, when you have to come back, when you have to reverse, first do for P&L and then do for OCA. Because impairment loss in revaluation case, we utilize the OCI, then we recognize in P&L. If reversal is there, first record in P&L, then come to OCI. Yes, sir. So see here now. Okay, this is done. Now let me take an example here. See here, everyone. This is my the example. 10,000, 10 years. So 1,000 is the value. Depreciation. My carrying amount is 8,000. RA is how much, sir? RA is how much? 3,000 here. So my impairment loss will be how much? 5,000. Impairment loss is 5,000. I record into P&L. Simple. So then for the next year, depreciation will be based on 3,000, that is new amount, divided by 8, 375, 375 depreciation. So how much is the carrying amount after this 4 years? 2,250. On this date, impairment reversal is that. My RA is how much on this day? 5,000. Sir, what is the increase from 5,000 to 2,250? It is 2,750. Can I increase the full value? Yes. Let us calculate the lower of. So lower of is what? What is the RA? On the dates are 5,000. Carrying amount if no impairment. Now you only say what will be the carrying amount if impairment was not there. So it will be 10,000 divided by 10, that is 1,000 into 4. 4,000 minus 10,000, that is coming to 66,000. So 6,000 is my carrying amount. Now you only say my lower is what? 5,000, sir. So can I travel from 2,250 to 5,000? Yes, bit. No issues in that. No issues. Easily you can reverse it. But if I say the question is saying what? Your RA is how much? 5,000. Your RA is what? 5,000. Your RA your RA is 5,000, but carrying amount if impairment was not there, it is 4,000. Can you take this 2,250 till 5,000? No, a limit is there, ceiling limit is there, that is 4,000. So maximum, how much is this? 1,750 is the reversal which we can do maximum. So remember the formula, it will be easy for you. So with this, impairment reversal is also done. Can we do impairment reversal on CGU? No, sir, it's not possible. On goodwill, no, sir, it's not possible. Yeah, reversal for CGU is also that it's not part of your syllabus. Goodwill acquired in business combination and corporate assets. Can goodwill and corporate asset generate independent cash flow? Never. That is the reason your corporate assets and goodwill is part of the CGU. Is part of the CGU. Because goodwill acquired in business combination does not generate independent cash flow, that is the reason. Therefore, it is allocated to CGU that are expected to benefit from the synergies. So goodwill, that is the reason the goodwill will be part of the CGU, because goodwill will not generate independent cash flow. Calculation will not come. Yeah, calculation comes, but reversal will not come for goodwill. But you have to remember the theory for theory questions. So with this, your this part is also done. IAS 36 is also done, better. Any doubts to anyone in IAS 36? That will be provided. That detailed calculation will not come, better. I have never seen, but remember the rules. Simple. They will mention that the impairment loss was this much. In our regular class, we have done question also where the amount was provided to you. IAS 36 is done. Then coming to IFRS 5. Non-current asset held for sale, a very small standard. Yes, sir. This standard covers two parts. So reversal of impairment related questions can do if possible. Okay. It'll take extra time then. It's okay to everyone? Not tested frequently? Chalo then. Let me do the class question. Reversal, no? Reversal questions you're saying, no? Reversal question I'll do for cost model, it's enough betting. For revaluation model, it will be too big and it will take time. This is revaluation model, corporate asset. In a question bank, that is MCQ question also known as B company. Yeah, OCNH. Yeah. See everyone. Z Limited owns property that is accounted for using the revaluation model under IAS 16. Array, no, not revaluation. I'll not take revaluation, it will create a little bit difficulty. It's enough that you understand cost model. See now, a head office building with a carrying amount of 140 million is estimated to have a RA of how much? 90 million due to falling in the property value. So how much is the impairment loss? They have recognized impairment loss of 50 million. What is the impairment loss? 50 million is the impairment loss which they have reckoned. After 3 years, property price in area have risen and the RA of the building increased to 120. So what is the RA now? So the RA is what? 120. And the carrying amount of the building had the impairment not be, it is 110. So what is the lower here? It is 110, sir. The lower value is 110. Now, what is the carrying amount in my books? Can I say my carrying amount is what? 90. Can I increase this 90 to 120? No, bete, there is a ceiling limit of 110. There is a ceiling limit of 110. So what is the maximum reversal here? 20 is the maximum reversal. 20 is what, sir? Maximum reversal. Is the part clear for cost model? Yes or no in the chat box? Yes, okay. Then let us do one revaluation question. Okay, chalo kar lete. Chalo, this question number 2 only I will do. Z Limited owns a property that is accounted for using revaluation model under IAS 16. On 1st January 2008, the building was revalued to 6 million with a revaluation surplus of 1.5. Okay, on that they have revalued 1.5 was the revaluation gain recognized in OCA. So what is the value of that property? 6 million. Yes, sir. Then in December 2002, due to market downturns, the RA of the building fell to 4 million. Here they have not given useful life, so it's not possible to calculate the depreciation. Directly we compare the amount. Because if depreciation is involved, the calculation will become too complex and ACCA will never give this. They can directly give you the amounts. No depreciation with it amount, you have to say what is the answer. So 6 million was the carrying amount, sir, here. Sir, the RA became how much here? Due to market downturn, RA was how much? 4. What is the impairment loss, everyone? Sir, 2 million was the impairment loss. Yes or no? The impairment loss was 2 million here. Yes, sir. 2 million was the impairment loss. Now, how will I recognize this 2 million? Sir, is there any OCI balance? Yes, in OCI there was a balance of 1.5. So I'll utilize this 1.5 first and then remaining I will recognize in P&L. Simple, clear to everyone. This is normal accounting which I've done. Impairment loss was of 2 million. Out of this 2 million, 1.5 recorded in OCI and 0.5 in P&L. Simple. Now let us see the reversal part. In 2004, market conditions improved. The RA arose to 5.5. Okay, what is the RA now? It became 5.5. It was 4, it became 5.5. At this date, the carrying amount, had there been no impairment, was 5.8. Now, carrying amount is how much, sir? 5.8. Which one will you select? You only see me. Lower. What is the lower, sir? 5.5. So you can travel, sir. The value was how much? So 4 million. From 4 million, can you travel to 5.8? No, there is a limit in between 5.5. So what is the maximum reversal? The maximum reversal is 1.5. Now, where will you do this reversal? Where will you do this reversal? First to PNL. In PNL, how much is the loss you have recorded? See, 0.5. So I'll increase the value of the asset by 0.5. Sir, in PNL, I'll record 0.5 and the remaining I will record what? 1 million. 1 million in revaluation surplus. I hope both the cases are clear to everyone. Clear? Cost model, revaluation model, both questions I've done. One question regarding this one. Just remember the basic rules and apply it. Now coming to IFRS 5, non-current asset held for sale and discontinued operation. This standard covers two parts: non-current asset held for sale and discontinued operation. Yes, sir. So non-current asset held for sale will not apply to deferred tax, financial assets, and agriculture. It will not apply to this all. Now see here. So what is the basic understanding? What is the definition? When we will say an asset is classified as held for sale, when we recover the amount of the asset through a sales transaction, not by using it. But in impairment, as per IS 36, either we sell or either we use. Here it is strictly mentioned that we sell it, we will not use it. So what is disposal group? A group of assets and liabilities which has been disposed of in a single transaction. In your exam, from disposal group, what is the question that can come? Two or three data would be given and the question would be identify which is a disposal group. So identify it properly. Now, sir, what are the conditions? Very important for MCQ conditions. When will you say that an asset is classified as held for sale? You will say that an asset is classified as held for sale when asset must be available for immediate sale in its present condition and the sale must be highly probable. Immediate means today. If I have a machine today and I have to complete a order for the customer, can I say it is classified as held for sale today? No. Once I complete the asset, I say it is classified as held for sale. Simple. Sale must be highly probable. When we will say sale is highly probable? Sir, when management is committed, active program is there to locate a buyer, asset must be marketed at the price which is reasonable to the market value, transaction must be completed within 1 year from the date of classification, significant changes of withdrawal from the plan is unlikely. It is unlikely that we will reverse our decision. So I say your accounting period is 1st January to 31st December. You classify the asset as held for sale from 1st July. So you have 12 months, 1 year from this date till next year. You have to sell this mid year. So with this part is done. So measurement. Sir, how do we recognize, sir? We have learned the definition. Recognition is also done. Sir, at what value we will recognize? The non-current asset held for sale will be measured at lower of two things. That is carrying amount and fair value less cost to sell. Carrying amount, fair value less cost to sell. So carrying amount as per the respective standard calculated. So fair value less cost to sell will be provided to you in the exam. Yes, sir. Sir, if we have a difference, what should we do, sir? If fair value less cost to sell is less than carrying amount, the difference is recorded in P&L as an impairment loss as per IFRS 5. It is an impairment loss, but as per IFRS 5. So if I say the carrying amount is what here? If the carrying amount is 10,000, fair value less cost to sell is 12,000. Is there any impairment loss here? No, sir. But if I say the carrying amount is 8,000, no, 10,000, the fair value less cost to sell is 8,000. So the 2,000 is what? So the 2,000 is an impairment loss. 2,000 is what, sir? Impairment loss. Where will you take this? Directly to PM. Yes, sir. Which category, sir? If it is IAS 16 and IAS 38, operating category. IAS 40, investing category. Now, once an asset is classified as held for sale, will you charge depreciation? Will you charge depreciation amortization? No. Once an asset is classified as held for sale, no depreciation, no amortization. And very important note here. Impairment loss is recognized in P&L irrespective of whether the asset is under cost or revaluation model. Whether the asset is under cost or revaluation model, we will not care. Directly the impairment loss as per IFRS 5 will go to P&L. Do not do this mistake. Examiner will give you the revaluation surplus balance. They will say the revaluation balance was 20,000. You got here 2,000. You will take to OCA. IFRS 5, nothing will go to OCA bit. Everything will go to P&L only. Simple. Understand this one point. Do not do silly mistakes in your exam regarding this. Yes, sir. So with this part is done. Then see everyone. If an asset is under revaluation model and the asset is classified as held for sale, so we must revalue the asset first using IAS 16 or IAS 40 before making it as held for sale. IAS 40 will not come, sorry ma'am. No, IAS 40 will come, yes. It's not IAS this one. IAS 40. So what I'm saying here, whenever the asset is under revaluation model, before classifying this as held for sale, first revalue it. A very important point again for MCQ. In IFRS 5, there are three mistakes which students will do: depreciation, that OCI thing, and this one. The fair value will be given. You will not revalue. Please revalue it. It's a request. If not, your MCQ will get wrong, zero. The option will be there. The answer which you get will be there as A or B, but the answer will be C or D. You will do that mistake. See, an asset is under revaluation model. Revalue the asset and then classify as a held for sale. See, example. I said 10,000 is the value of the asset. 1,000 depreciation, so 9,000. My fair value is what? 12,000. 3,000 I'll take to OCA. Yes, sir. I take to OCA. 12,000 is my new amount on which I charge depreciation. Divided by 9. So 1,333. What is my carrying amount? 10,667. Can I directly take this to non-current asset held for sale? Do not do that. First, revalue it. Revalue it to 14,000. The value will be given. So 3,333 will go to OCI. Yes, sir. So my carrying amount is how much, sir? Sir, carrying amount is 14,000. Sir, what is the fair value less cost to sell? 13,500. Why? So 14,000 minus 500 cost to sell. This 500 I record into P&L. Will I offset with the OCI balance? No. It will go to P&L simple. With this part is done. So for disposal group, what should we do? For disposal group, follow the same as we have done in CGU. Not tested frequently, but follow the CGU. Goodwill, then specific asset, and then remaining. Yes, sir. Subsequent measurement. So what should we do subsequently? Subsequently, again we should value at what? Lower of carrying amount or fair value less cost to sell. So what will be the carrying amount? The carrying amount will be as per the initial measurement. Whatever we have done initially, it will be the same amount. Less fair value cost to sell. So if the carrying amount is more, fair value less cost to sell is less, impairment losses that as per IFRS 5 record into P&L. Which category? Investing or operating depending upon the asset. Sir, if the fair value less cost to sell is more, sir, can there be reversal? Yes, here also reversal can be there. So what is the maximum reversal here? Here the maximum reversal is the impairment loss which you have recognized as per IAS 36 and IFRS 5. The maximum reversal will be what? As per IAS 36 and as per IFRS 5. Calculation will not come in your mind. Remember that if fair value less cost to sell is more, there can be reversal. Maximum to IAS 36 and IFRS 5. This is subsequent thing. So see here everyone, let me take an example. Example, 10,000 is the value of the asset, 1,000 depreciation we have recorded, sir. Here the value was 8,000. Here I say impairment 8,000. I say the asset is classified as held for sale after 6 months. So for this, I will charge 5,000 depreciation. My carrying amount will become 7,500. On this day, the fair value less cost to sell is 6,000. So 1,500 I record into P&L as an impairment expense. Simple. This is the journal entry which we pass. Non-current asset I remove. Non-current asset held for sale 6,000. Impairment loss of 1,500. Now I say this is your year end. After 6 months. Again I have to do subsequent measurement. So my carrying amount is what, sir? 6,000. Do not take 7,500. 6,000. And then fair value less cost to sell is 5,000. So further impairment loss of 1,000 will be taken to P&L. So with this, yeah, this part is done. Then coming to presentation. Sir, how we will present? Can I say this? We will show as a separate line item under non-current, under current asset. We will show as a separate line item. So for disposal group also we will show separately the assets and liabilities. Can we offset it? Theory question. Can we offset the assets and liabilities under disposal group? No, you can't do it. So presentation also we have done. Okay, this was a revaluation we have already done. Then coming to some important notes for theory purpose. If any asset is classified as held for sale after the reporting date, like your IAS 10, your year end is 31st 12 2000x5, the financial statements are approved by board of directors on 31st 3 2000x6. Here I classify the asset as held for sale. Asset is classified as held for sale. Will this be considered an adjusting event? Will this be an adjusting event? No, better. It's non-adjusting event. It's non-adjusting event. So what should we do? It's a non-adjusting event. We have to provide a disclosure, a simple disclosure provide. With this part is done. Yes, sir. The next one. Non-current asset shall be classified as held for sale even if non-current asset is not sold. Even though your non-current asset is not sold within 1 year. Sir, can we still classify this held for sale? Yes. Theory question. Delay is due to circumstances which is not controlled by the entity. The delay is due to circumstances which is outside the control of the entity, and evidence should be there that the management is still committed to sell the asset. The management is still committed to sell the asset. So if a non-current asset is not classified as held for sale, still we can show this as no. If it is not sold within 1 year, we can classify this as held for sale after 1 year also. If commitment is there and evidence is there, and it is due to circumstances which is outside the control of the entity, which is not within the control of the entity. So with this, your part A is done of this chapter. Then next one, discontinued operation. So what does discontinued operation says? Listen now. Now discontinued operation says what? That when you prepare the P&L, we have to report in a separate line item. Why we report this? For comparison purpose. Comparison, so that the shareholders, stakeholders can compare it. Sir, and in the previous year also we have to do this. So this profit and loss from discontinued operation will include two important things. So profit or loss from that company, whatever the company has the profit or loss during that year, and profit and loss on the sale of that. I dispose of the segment. We dispose of the segment, we have a gain or loss. Both the things will be shown in a single line item. See now, what is the definition? A discontinued operation is what? A discontinued operation is a component of an entity that either has been disposed of or classified as held for sale. Either it has been disposed of or classified as held for sale. And either we have disposed of or it is classified as held for sale, any one criteria, and represents a separate major line of business or geographical area of operation. It represents a major line of business, or it is a single coordinated plan to dispose of the business, dispose of a separate major line of the business, or subsidiary acquired exclusively with a view to resale. So this will come for theory, or a question could be given. You have to identify whether it's a discontinued operation or not. Component of an entity means what? It has been, it can generate independent cash flow. So see here now. So with this, sir, disposal group is classified as held for sale. Sir, can disposal group be a discontinued operation? Yes, a disposal group can be discontinued operation if the definition is being met. If the definition of discontinued operation is met. Sir, held for sale will affect balance sheet. Discontinued operation will affect P&L. So if disposal group meets both the definition, it will affect balance sheet as well as P&L also. Yes, sir. So when we prepare discontinued operation, can I say current year also I show, previous year also I show. But when we classify this as held for sale and in balance sheet, do we provide the comparative for the previous year also? No. Only for discontinued operation this is done. Presentation, how we will present it? How we will present it? We will present in a single line item. We will present it what? In a single line item. Single line item. A single line item. Then entity should disclose the following items. What are the disclosures we will give you? Sir, revenue and expense for the discontinued operation. What is the pre-tax profit or loss? Tax expenses of the discontinued operation. Profit after tax of discontinued operation. Cash flow of discontinued operation. All these are the detailed calculations which we provide in notes to accounts. Where we'll provide this? In notes to accounts. And note important for MCQ. If an operation is classified as discontinued in the current year, then it must be classified as discontinued in the last year comparatives for comparison purpose. But if an asset is classified as held for sale in current year, then need not classify as held for sale in comparative. For discontinued operation, comparative also we have to disclose. But for held for sale, not required. For held for sale, it's not required. Clear everyone? So with this, your IFRS 5 is also done. What are the important points? I mentioned the revaluation thing and the theory part. So avoid silly mistake in these areas. So this is the way your presentation is done. See everyone, as a single line item, we record it as a single line item, as a discontinued operation. So with this, your part 1 is done. With this, your part 1 is done. Now let us take 10 minutes break. Come back and do IAS 2 and IAS 41. Very important for section A. Let us complete. It will not take 10 minutes, 20 minutes, not more than that. I think so. So let us take a small break. And everyone, it's 8:45. Be back by 8:55. As I mentioned, 10 to 15 minutes we will extend, no issues in that. Chalo, chalo, everyone come back. Stressing, yes, others. Yes or no in the chat box. Yes, okay. Now see, part 1 is done. Part 2, I know part 2 tomorrow we'll be doing. So be focused and concentrate. You have to be focused in tomorrow's class because we are doing what? Part 2 very important. Now part 3 is also very important from the MCQ point of view. Section A and section B. In your pre-mock, when you see inventory, the two MCQs were there. Section A, section B, including both. 4 mark question from IAS to inventory. So chalo then, let us start with inventory IAS to inventory. So inventory we have already covered in your FA also, etc. We have to understand the basic. It's not required that we understand in detail. No. What is inventory, sir? Inventory is an asset that are held for sale in ordinary course of business. What is inventory? Inventory is an asset that are held for resale in ordinary course of business, that is finished goods. In the process of production for resale, it is in production process, like your work in progress. So your finished goods, work in progress, and raw material will be what's sir? Inventory. Why raw material? Because it is used for producing a finished goods. Yes, sir. Definition. Recognition. When will you recognize inventory? So we will recognize inventory when probable future economic benefits and cost can be measured reliably. When probable future economic benefit and cost can be measured reliably, we record it what? As an inventory. So measurement. Now coming to measurement. Initial measurement and subsequent measurement. Initial measurement is always at what, sir? Is at cost. Cost means at the date of purchase when we purchase. So subsequent measurement is at what? Balance sheet date, reporting date. So subsequent measurement is cost or NRV. Cost or NRV, whichever is lower. So cost or NRV. So we have to learn how to calculate cost and how to calculate NRV. So see here everyone. Excuse me. Cost includes all cost incurred in bringing the inventory to their present location and condition by the management. Whatever is the cost which we have incurred to bring the inventory to the present location and condition which is intended by the management, we will consider. So what are the components of cost? See, the MCQ can come from this part. What is included, what is excluded? So purchase price. So when we purchase, we consider the purchase price. Import duties, non-refundable taxes, same like your IAS 16. Transportation cost, we will consider that. Carriage inward, that is known as carriage inward. Insurance cost, when we transport any inventory, we have an insurance on that because it is a very this one, it's like we say no, handle with care. It's regarding some an important thing. Then direct trade discount, we will reduce the trade discount. Do we consider cash discount? We ignore cash discount. Any other directly attributable cost will be considered here. So when coming to conversion cost, when we are manufacturing an inventory, sir, production, labor, overheads, everything is included. Yes, sir. Sir, when coming to this production overheads, like your rent expense, factory rent, electricity expenses, how we will allocate, sir? How we will allocate? We are manufacturing how many units? On that basis? Yes. But what is the normal thing? On normal capacity under normal circumstances. As per normal circumstances, what is the normal capacity? Okay, in this, the normal capacity of this factory is 10,000 units. So take it that simple. Need not consider the actual. IAS says what? There is a detailed calculation for this. It's not part of your syllabus. There is detailed calculation for this. Not part. It's required that you understand. It is based on normal capacity for MCQ purpose. Yes, sir. Then other costs like non-production cost, non-production only if it is incurred to bring the inventory to the present location and condition, like storage cost in case of whiskey and wine. In case of wine, can I say we store it? In that case, we have storage cost. That storage cost will be part of what, sir? Inventory, if it is necessary for that inventory. Yes, sir. Borrowing cost, if the conditions are being met, we have covered it. Sir, in conversion cost, we have something known as joint cost. We have something known as joint cost. Now, what is this? Understand. Joint product cost. Now, see everyone, whenever there is a joint cost, what should we do? We should take that and we have to deduct the NRV of the byproduct. Let me take an example. Calculation will not come, theory is important from this. I say curd is that from curd we prepare butter and cheese. What is the byproduct? The byproduct is buttermilk. Sir, we say 100 kg of butter and 150 kg of cheese. So the standalone selling price in the market, the selling price is what? The NRV. The NRV is 55. The NRV is 190. So what is the value total? So 5,500, 28,500 is the NRV. Sir, what is the cost of this curd? Sir, the cost of the curd is $10,000. The cost of the curd is $10,000. Now this 10,000 belongs to what all better? Belongs to butter and cheese. We have to calculate the cost or not for this butter and cheese? Yes. How we will calculate? Sir, we use this NRV. The number of units or the kg, the butter which is produced into the NRV, this quantity which is produced into the NRV, on this basis we will allocate this. On this basis we will allocate. Simple. Yes, sir. Now, before allocating, we have to reduce the NRV of byproduct. Byproduct was buttermilk. The buttermilk NRV was 500 I've reduced. This 9,500 I've allocated to butter and cheese. This 9,500 I've allocated to butter and cheese. Simple. Will calculation come? No, you have to remember for theory. This is also for theory that the production overheads are allocated on normal capacity basis. Then whenever joint product cost is there, we allocate it into the particular product. But before that, we deduct NRV. So with this, the cost part is done. Now, sir, what are the costs which are excluded? A very important MCQ comes in your exam. See, costs which are excluded. Abnormal amount of wastage. Abnormal wastage is ignored. Same we have learned in IAS 16. Storage cost is ignored unless necessary for production process. It is necessary for production, consider it. Sir, administrative overheads, ignore it. Selling cost, ignore it. Carriage outward, ignore it. Carriage outward means what? Transportation cost to transport the inventory to customer. Yes, sir. It is ignored. So this was the thing which we have done. See now, purchase of fruit, we consider all this. We ignore. We have done this question. I hope you have understood. Now coming to the next part, important part, NRV. Net realizable value. What is the net realizable value? Understand this. NRV is entity specific. Whereas your fair value is what? Market specific. It's from the company's point of view. So NRV we have to understand for three cases. NRV is the estimated selling price in ordinary course of business less the estimated cost of completion and estimated cost necessary to make the sale. So what is the cost which is estimated to be incurred for completion as well as to sell it? So for finished good, what is the NRV, sir? Estimated selling price minus cost to sell. Simple. It's simple and easy. So for work in progress, estimated selling price, that is for finished goods, minus cost to complete minus cost to sell. Because we have to sell also, we have to complete this. So each and everything is considered here. This is what NRV. So for raw material, what is the for raw? If I say this raw material is converted into finished good, if this raw material is converted into finished good and it is sold at a profit, it is sold at a profit or cost, the cost and NRV are one only. If today I have a raw material cost I know. What is the NRV, sir? The NRV will depend. Sir, if we can convert this raw material and sell it at a profit at a cost, then the cost and NRV will be same. No different. If finished goods are sold at a loss, that is at below cost, in that case, measure raw material at lower of cost or replacement cost. Replacement cost means what? If I go today in the market to purchase this inventory or to replace this, what is the cost? That is known as replacement cost. You'll measure at lower of this. So very important in your exam. MCQ comes regarding NRV calculation. So with this part is done. Then we have done 2 to 3 questions in our regular classes. Why will NRV decrease? There are a lot of reasons. Yes or no? NRV, fall in selling price, physical deterioration, obsolescence of the production process, then sir, obsolescence in the inventory, etc. NRV will decrease. So with this, we have done with the definition, recognition, measurement. Measurement, we initially recorded cost, sir. Then subsequently we recorded cost or NRV, whichever is lower. Sir, in that case, we will have a loss or not here. Where will you record the difference? The difference you will record in P&L. Under which category? Operating category. As a loss. It's not your actual loss. It's a loss. We recognize in P&L. Now coming to the next thing. Cost formula. How we will calculate the cost, sir, of an item. The techniques of inventory valuation. Inventory valuation, you know there are two methods, sir, FIFO and weighted average cost. LIFO is not there, it has been removed. No, excuse me. Inventory are not ordinarily interchangeable. Inventory, we can't change the inventory. If the inventories are not interchangeable, in that case, how will I calculate the cost of that inventory? I will see the particular cost of each and every inventory. If I say today I have inventory of calculator and this pencil, now, can I say, are these interchangeable? No, Baba. These are not interchangeable. So, for this, I will calculate the specific cost. For this, I will calculate the specific cost. Excuse me. Then, sir, inventory are interchangeable. If inventory are interchangeable, actual cost method, that is FIFO or weighted average cost. FIFO means first in, first out. Weighted average cost means the average cost we calculate and multiply with the closing inventory. Then, what are the other methods? Adjusted selling price and standard cost, which are part of your PM, not M. But you have to remember what are the techniques. Simple. Because if a company has 10,000 iPhones, will they sit and calculate for each and everything the cost? No, the iPhone cost is same. So they will take 10,000 into the cost. If I say a company has one iPhone, two Oppo phone, three Vivo, in that case the cost is totally different. For each and everything we have to calculate it separately. So FIFO, first in, first out, weighted average cost. I hope everyone knows FIFO and weighted average cost. So now with this, your inventory is done. What is important? See now. When coming to margin and markup. So margin, in case of margin, the sales will be 100%. Cost of sales will be 75. Profit will be 25. So in case of markup, sales value will be 25%. Cost of sales will be 100. Profit will be 25%. So in markup, cost plus markup, it will be what? 125%. Then, sir, what is the other thing? One more thing which we have learned. Cost of sale. What is the formula for cost of sales? So, cost of sales is opening inventory plus purchases minus closing inventory. Opening inventory plus purchases minus closing inventory. Sir, listen here, everyone. If closing inventory is increasing, what will happen to cost of sales? So, the cost of sales will come down. So, profit will increase. Sir, if my closing inventory is decreasing, my cost of sales will increase, profit will decrease. Very useful when you do IAS 8 retrospective questions comes in your exam. Then when you do interpretation also very useful. So closing inventory has what? A direct relationship with profit. Closing inventory has indirect relationship with cost of sales. Yes, sir. Same thing you should know for opening also. Okay. With this part is done. These are the MCQs which you have done in the class. Okay. Where will you record the difference between cost and NRV in P&L? Everyone, please see this MCQ. I want that we do this one MCQ. In preparing the financial statement for the year ended 31st March 2006, the inventory count was carried out on 4th April. Inventory count is done on 4th April, but the year end is what? 31st March 2006. The value of inventory count was 36 million. Between 31st March and 4 April, goods with a cost of 2.7 million were received into inventory and a sale of 7.8 million were made at markup 30%. Yes, sir. Now you only say the inventory count should be done at 31st March but the inventory count is done on 4th April. 4th April. This is wrong. Sir, we have to calculate the inventory at 31st March. So what will I do, sir? Sir, here we have to calculate. So here in this period, after considering my inventory value is 36 million, can I say in this inventory sold is excluded? Yes, sir. So see here, everyone. This 2.7 is the cost and received an inventory for 2.7 and I'm selling here what 7.8. So what will I say? I have to remove this because the 2.7 will not be included at this date. I will remove this 2.7. So this inventory which I've sold, the inventory which I've sold, is that inventory included in this? It is not included. But at 31st March it is included. I add it back. So how much it will be? 7.8 is markup is 30%. So markup sales value is what? 130 percentage. Calculate the 100 percentage, you will get it, that is 6. So 6 I added. So what is the value of your inventory? 39.3. A very good question. It is part of FA, but frequently we have seen that examiner giving this in FR also for IS2. So with this, your IS2 is completed. Any doubts to anyone in IS2? Okay, no doubts. Then, chalo, let us do the last standard for the day. IS 41 Agriculture. Very important from section A point of view for MCQ. Last September attempt in one of the set agriculture question was there for 2 marks. Section A. It was very easy. Huh? IS 41 Agriculture will apply to dairy farms. Yes or no? Poultry farms. If any company is there into agriculture business, etc. So see here, everyone. What is the scope? Accounting treatment, presentation, disclosure relating to agriculture activity. What is the scope? What all we will cover? Sir, we will cover what the presentation, disclosure relating to what? Agriculture activity. Now, what does agriculture activity means? Agriculture activity means what? We will come to that. Of what's a biological asset? What is biological asset? We have to understand that. So, what is agriculture produce? Okay, this standard will cover accounting treatment, presentation, disclosure of agriculture activity, biological asset, agriculture produce. So see here, everyone, a small example. This is a mango tree. Now this mango tree will be what? IAS 16. It is a bearer plant. MCQ comes in your exam. The difference between bearer plant. Bearer plant will not be as per IAS 41. It is IAS 16. So the mangoes on this tree, IAS 41, sir. So the mangoes which we have plucked, IS2 inventory. IS2 inventory. So let us understand now. IS 41 will not apply to water. Sir, IS 41 will not apply to the land which we have, any intangible asset which we have. Barrel plant, IS 16. Why we say for a mango tree, IS 16 will apply? Because can I say it will give future economic benefits for more than 1 year? Because my intention is to sell the mango, not the mango tree, bete. But I say I have a teakwood tree. My intention is what? To sell the teakwood tree. So the teakwood tree will be what? IS 41. Then government grant related to barrel plant. If barrel plant is not covered here, the grant also will not be covered here. Tractor, tools and equipment. Some equipment will have IS 16 we apply. Simple. This was a basic thing. Now coming to biological asset. The first definition. What does biological asset mean? So biological asset means a living animal or a living plant. Living animal means cow, sheep, hen, bird, etc. The accounting is an IS 41. Yes, sir. Everyone a question. If I have an animal in a zoo, I have a tiger in a zoo. Is this a biological asset? I have a tiger. Is that a biological asset? What do you think? No. Biological asset means living animal. Tiger is a living animal. It is what? It is a biological asset. But will IS 41 apply to the tiger? No. We'll come to that. See now. Living plant. Living plant means plant which is sold like rice, wheat, jawar. We cut it and we sell it, sir. Plant which has a produce, like plant which has a produce, like cotton plant. Can I say cotton plant has a life of less than 12 months? So here we sell the cotton plant and also we cut the cotton plant also, and the cotton we separate it and sell it. The plant life is more than 12 months. Like mango tree, sir. So for mango tree, we have mango tree. Mango tree, what is the accounting? Sir, IAS 16 barrel plant. Yes, sir. In that the other case, in case of mango tree, if agriculture produces that the mango on the mango tree, it is IAS 41. Then after harvest, once I harvest the mango, what we will apply? IAS to inventory. Simple. So now agriculture, biological asset we have done, living animal, living plant. So what is agriculture activity? Agriculture activity means what? See now. Agriculture activity refers to management by an entity. What, sir? What management? Management by an entity of biological transformation. The entity should manage the biological transformation. Biological transformation means what's a growth of the asset, etc. And harvest of biological asset. The company should manage the biological transformation and harvest of biological asset. For what reason, sir? For sale or additional biological asset or conversion into agriculture produce. Now, what is biological transformation? Biological transformation means what? Process of growth, degeneration, production, and procreation that causes qualitative and quantitative changes in biological asset. Now, you only say, if today I have a poultry farm, as a company, I'm managing the poultry farm or not? Yes, sir. What I'm doing? I'm doing the biological transformation. Yes, sir. The animals are growing. Yes, sir. Simple. Cow, if I have a dairy farm, cow is growing. Why, sir? And harvest. That is a biological transformation. The cow is growing. As well as harvest of biological asset. Harvest of biological asset. So, what is the harvest? From cow, milk. From dairy, from this poultry farm, eggs. Why, sir? For sale, I am planning to sell it. Or additional biological asset, I am multiplying the biological asset. Or I am waiting for that to be converted into agriculture produce. This is known as agriculture activity. So IAS 41 will apply when IAS 41 will apply when it is agriculture activity. Now you only say when I have a zoo in animal, will IAS 41 apply? No, there is no such this one. There is no harvest, they are not keeping for sale, etc. Dog, if I have a dog for security purpose, IAS 16. Dolphin, which I use for the shows, IAS 16. Tiger, which I use for the shows, IAS 16. Because there is no agriculture activity here. MCQ important. Yes, sir. So what does harvest means? Harvest means what? Detachment of produce from the biological asset. I pluck it. I detach it. Or the cessation of the biological asset life process. Either I end it. Either I end the life of that asset, or either I do what? I detach it. Yes, sir. Then till here we have done the basic definition. Now barrel plant. What does barrel plant? Barrel plant is IAS 16. Barrel plant is a living plant that is used in production or supply of agriculture produce. It is supplying agriculture produce like apple tree, mango tree, etc. Expected to bear produce for more than 12 months. It will produce benefit for more than 12 months. Has a remote likelihood of being sold as agriculture produce. Here we are not selling the plant here. Our aim is to sell what? Our aim is to sell the produce from it. Like see, mango tree, rubber tree, grapevine. Yes or no? Grapevine. There is a difference between WINE and VINE. WINE is alcohol, VIN is the tree. It is IAS 16, sir. WIN is IAS 2. Students will do mistake here. Avoid this. So with this barrel plant definition, now coming till now the definition part, and now coming to recognition, sir. Recognition. Now, when will you recognize a biological asset or a agriculture produce? So, biological asset or agriculture produce will be recognized when entity has the control as a result of past event, probable future economic benefit, and fair value or cost should be available, can be measured reliably. So many IES 2 we have done, IES 16, 38, 40. It was not mentioned fair value. In IES 41, in IES 41 we have what? Fair value thing. So we recognize this at fair value. The first priority is given to fair value and then cost to sale and then the cost of the asset. So measurements, biological asset, agriculture produce. How we will measure it? See now, initially we record it at fair value less cost to sell. Sir, will the fair value and the purchase price be the same? Most of the time it is same. But there will be some or the other difference. That difference will be recorded into P&L today only. If fair value is not available, then what will follow? So the cost same as IS 60. Yes, sir. See now, initial recognition, debit biological asset at fair value less cost to sell. How do we calculate? Same as per IS 36, which we have learned, fair value less cost to sell. Credit cash or bank, the amount which you pay to purchase it. So the difference is what, sir? Gain, sir. I have paid 10,000, but in the market the value is 12,000. That 2,000 is gain in operating category. Initially at fair value less cost to sell. So subsequenting, how is the subsequent treatment here? Fair value less cost to sell again. So it is at fair value less cost to sell. Sir, will there be difference? Yes. If there is a difference, how we will take it? That difference will be taken to penal operating category. Either the value of the asset will increase and it will be a gain. Either the value of the biological asset will decrease, it will be a loss. Simple. Yes, sir. With this part is done. Now, some few points for theory. This standard is full of theory only. Your IAS 2 and this one. Calculation, very rare. Calculations are less. Note. Biological asset is measured using fair value. No option for cost model. Once we have followed fair value model, can we shift back to cost model? It's not possible. Fair value less cost to sell changes due to physical change and price change. Whenever I have a biological asset, the fair value will change because of two reasons: physical change and price change. We will see a question also regarding this. If, sir, a new calf is born today, a new calf is born, a baby calf is born, sir, how we will recognize this? We will recognize debit biological asset. Yes or no? It is a biological asset or not? Yes, sir, it is a biological asset. And what will credit? Am I incurring any expenditure for this? No, sir. Directly into penal as a gain. Yes, sir. A new calf is there, total amount will be as a gain. Sir, I have a poultry farm, dairy farm. Sir, we have done a lot of expenses regarding cow, medicines, a lot of other expenses are there. How we will record that? Normally PNL. Normally into PNL expense. Simple. Yes, sir. Now see here, everyone. The agriculture produce. How will you record agriculture produce? Sir, agriculture produce means what? Agriculture produce is the harvest produce of the entity's biological asset. From that biological asset. Initial measurement at fair value less cost to sell. Same fair value less cost to sell. Gain or loss is recognized in operating category. Gain or loss is recognized in operating category. Now today the first time it is a gain only, because if I pluck the mango, the mangoes are there on the tree. Did I incur any cost for those mangoes? No. So I record debit agriculture produce, credit PNL, full amount gain. So then subsequent measurement, the subsequent measurement will be what better? Today I pluck the mango, I plug the mango, I record what? Debit agriculture produce, credit PNL. Once I plug the mango and I've recorded agriculture produce, debit, credit PNL, then what it will become? It will become IAS2 inventory. Because accounting we do for how many months? Better. Accounting we do for 12 months. So within 1 or 2 months, the fruit, we will get it. We'll recognize agriculture produce, credit PNL. And then what do we do? Subsequent measurement, we follow IAS2. After produce has been harvested. That means once we have plugged it, agriculture produce IAS 41 done, then IAS2 will apply. So after produce has been harvested, IAS 41 ceases to apply. Agriculture produce becomes an inventory. Will become an inventory. Yes, sir. So see, or sometimes what will I hand? We will end the life of the asset. We'll end the life of the asset. In case of carcass, etc., we have seen that we end the life of the asset. So when we end the life of the asset, what is the journal entry we pass? Sir, debit, credit, biological asset we are removing. Debit, agriculture produce. There are two types of agriculture produce. Either I pluck a mango or either I end the life of the asset. When I pluck a mango, this is the journal entry which we do, and subsequent inventory. If I end the life of the asset, we remove the biological asset, we recognize agriculture produce, whatever is the difference is your gain or loss. Gain or loss. So with this, your this part is also done regarding what? Agriculture produce. So agriculture produce. Now see, let me show one thing for you regarding this one, the fair value thing, huh? Here now see, the physical. Today I say that I purchase a cow for 2 years. This cow is 2 years old. So the fair value less cost to sell is what? 10,000, sir. Sir, after 1 year, the cow will become 3 years old. What is the increase in value? 2,000 is increase in the value. Sir, where will show? We will show in P&L. We will show in P&L 2,000. But in disclosure notes, we have to separate it and show it. So this 2,000 is because of two reasons: physical change and price change. Physical change and price change. Sir, how we will get to know what is the change regarding price? So this cow was 2 years old, the fair value. So today at the end, I will calculate the fair value of a 2-year-old cow. So I say on this date, the 2-year-old cow, the fair value is 10,800. Year also 2 years old, year also 2 years old. So the difference of 800 will be what? Price change. So the difference of 1200 is physical change. So when you have to calculate the price change and physical change, the age of the cow should be same. If it is 2 years, if it is 2 years here, we say what? The difference which you get between fair value is price change. The remaining will be physical change. Will this come in the exam? I have not seen any MCQ regarding this, but it is mentioned on ACCA study hub. We have to know this concept. So with this part is done. Okay, then okay, these all are the MCQs which have done 17 to 18 MCQs. But government grant, coming to the last part. So government grant, there are two things. If biological asset is recorded at fair value less cost to sell, or biological asset is recorded at cost model. If biological asset is recorded at cost model, same as per IAS 20. As per IAS 20, it will be recorded, reduced from the cost of the asset or deferred income. Sir, if biological asset is under fair value less cost to sell, what should we do? What should we do? If it is unconditional grant, unconditional means directly record into P&L as an income. When, sir? When income becomes receivable. When it becomes receivable, not when it is received. When it becomes receivable. When it becomes receivable, we have to record it. So conditional grant, the entity recognizes it as an income only when the conditions have been met. All the conditions have been met. After that only I will recognize. But what did we do in IAS 20? Over the years, we were recording as and when the condition was fulfilled. Here, all the conditions should be met. After that, only we will recognize this government. This is the difference. So this is then disclosure. What are the disclosures? The methods and assumption used in determining the fair value. Separate disclosure for physical change and price change. What is the total gain or loss during the year? And reconciliation like a passbook. Any brought in, any disposal during the year, we have to mention. So with this, your IAS 41 is also completed. Any doubts to anyone in IAS 41? No? Okay then. So with this, your IAS 41 is done. Your part 1 and 2 small standards are done. I hope the revision was helpful to you. Others, yes or no, you can comment or you can message in chat box. So tomorrow we will do the part 2. So bye bye. Have a good day. Signing off. Radhe Radhe to everyone.